On behalf of the Audit and Assurance Standards Board of Institute of Chartered Accountants of India and the Southern India Regional Council of the Institute, we present before you the 2 days workshop on auditing standards. We are privileged to have Sri R. Ambalavanan, Indian Audit and Assurance Standards Principal Director and Commercial Audit and ex-officio member Audit Board of the Comptroller and Auditor General of India, Chennai office, as the chief guest for this workshop. I would like to request our Honorable Regional Council members Gopal Saraju and Hemavati Madam to escort our chief guest to the dais. And I request Dr. P.T. Giridharan, Joint Director and Head Southern Region Office, to come on dais, please. I acknowledge the presence of C.A. Sanjeev Aditya, the technical sessions resource persons for the first program. And we will start the proceedings of this inaugural session by playing the Institute's motto song. I request everyone to stand up as a mark of respect for this august institution. Thank you. I request C.A. Gopal Raju, presently the Chairman, Indirect Taxes Committee of the Southern India Regional Council of Institute of Chartered Accountants of India, to extend a formal welcome address.
Very good morning to one and all. Sri R. Ambalavanan, IAAS, the Principal Director of Commercial Audit and ex-officio member of Audit Board. My council colleague, Srimati C.R. Hemavati, Chairperson of the CP Committee of SARC, Joint Director Dr. P.T. Giridharan, and Head of the Southern India Regional Council official Dr. T. Paramasivan, past Chairman of Southern India Regional Council, C.A. Kumar sir, P.S. Kumar sir, senior members of the profession, friends, ladies and gentlemen, a very warm good morning to one and all. At the outset, I welcome each and every one of you for this one of the wonderful program. By the end of an year, we are welcoming 2019 with a very happy note, with enlightening ourselves and also updating ourselves with the latest developments in auditing standards. I am sure all of you are aware about the time now our profession is being very sensitive era where the formation of NFRA, National Financial Reporting Authority, has already taken off despite confusions and maybe with not with clarity that whether such a independent regulator is required. But from a global perspective and from the perspective of the profession, independent regulator, despite being ICA being a regulator, especially in the recent developments that has happened, where there are various negative comments about the profession, the government has thought it fit, especially for only one reason. Regulating independent professionals has been the core of all the three professional bodies. Institute of Chartered Accountants, Institute of Cost Accountants of India, Institute of Company Secretaries of India. All the three bodies, they were regulating the professionals. But when the question of regulating the firms, it was not much within the ambit of the three professional bodies. And that is where government has taken a big leap, a giant leap, I can tell you, that no, entire profession has to be regulated, means it is not only the professionals, it is also the firms. And globally, we are seeing, and we are also evidenced by happenings, that once something goes wrong, it is not only the professional takes the beating, it is also the firm that is blacklisted. Privately, internally, within the list, empaneled list, blacklisting used to happen with respect to firms. But today we have with us the Supreme Audit Institution's representative, the Principal Director of Commercial Audit, an ex officio member of the Member Audit Board, where they have their office just nearby in Indian Oil Corporation, mezzanine floor. I am very delighted to invite Sri R. Ambalavanan IAS on behalf of each and every one of us present here. Friends, please join your hands for Mr. Ambalavanan. My memory goes back because I was associated with Member Audit Board as a guest faculty for their various programs. Today, if I'm groomed as a faculty, much of the contributions, I will say, two institutions have groomed me as a speaker. One is Institute of Chartered Accountants, and the second is the Comptroller and Auditor General. Because I have been their guest and visiting faculty for close to almost 2 decades. It's almost 18th year now. Their Regional Training Institute, Indian Audit and Accounts Department, where I am a regular faculty, where whenever, because representatives, audit officials from Tamil Nadu, Kerala and Karnataka, all the three senior audit officials and audit officials and AAOs, so SAOs, AAOs and AOs, they will form part of the training team. And every now and then a new topic, especially on auditing and accounting, they will come out with unique areas. Because government accounting, government audit is something very unique. And especially they go beyond vouching, they go beyond numbers, and they question something which statutory auditor we don't question, that is the propriety. Why it should be done? As a statutory auditor, we only ask one question and we limit our scope to how it is done and whether there is an evidence for it. But they go to the root cause. Should it be done at all? Whether an expenditure or whether it is a capital expenditure, should it be done? Whether there is any requirement for it, they go to the root cause of it. And that is where the CAG, they supplement the statutory audit and they rely not only 100%, 200% on all the findings. Every time, and I am sure we have various representatives who have been the central statutory auditors and central and state PSU auditors, Sir Mr. Ambalavanan sir. We have a lot of senior chartered accountants here who have been the auditors of central PSUs, state PSUs and public sector banks. And every time before the start of an audit and even before conclusion of an audit, we used to have a meet with the commercial audit head. They used to invite and what is your conclusion, and even before start of an audit they used to suggest these are all the focus areas which we request you to see and highlight to us so that the lead we can get from you. So it's actually a supplementary work which we have been doing along with CAG. And coming years, it is not only the chartered accountancy profession which is coming under the scanner of NEFRA. The Institute of Cost Accountants and Institute of Company Secretaries professionals also will be coming within the fold. With the development of standards, it started with accounting standard, then to audit standards. Today we have the quality standards, we have the internal audit standards, and from 1st July 2018, valuation standards have become mandatory for every valuation assignment. The future is application of and prescription of the standards has to be the mandate while discharging the function of a professional. And that being the motto, today's program, especially we have with us the first session, CA Sanjeev Aditya. I also welcome CA Sanjeev Aditya from Chennai, who will be taking us through two technical sessions today on SA 240, one of the most critical standards, which is the responsibility of the auditor relating to fraud in an audit of financial statement. And the certificates by practitioners and reports by practitioners, contemporary issues, emerging issues, especially the latest issues based on the certificates, and the revised guidance notes on reports or certificates for special purpose. Today, the professionals' certificates and reports have taken the priority or the sanctity, and government is very, very clear that if we need to assess and take and believe the industry and the business, it is only the professionals whom government can help, and they rely 100% on professionals. And that is the need for government to oversee the professionals through an independent regulatory body. I must here place on record that a regulator like Insolvency Bankruptcy Board of India, IBBI, they have been so proactive, coming out with innumerable number of regulations and guidelines, and they have been overseeing the professionals, especially the insolvency professionals and registered valuers. They come under the banner of IBBI. And every now and then, it's a global practice actually. There are countries where, especially in our setup and compared with the global setup, a membership renewal and a certificate of practice renewal in India, it is considered almost the same. But there are global practices where certificate of membership is renewed by payment of your annual fee. But COP renewal doesn't happen by payment of fee on time, where the credentials, the past credentials has to be submitted. Based on that, the COP renewal happens. And very on a minuscule percentage, on a single digit percentage, maybe on 4% to 5% of the applicants who are applying for the COP renewal, their applications are taken at random, especially a country like Singapore. When a COP renewal application is made, there we have to give the past accomplishments. So what are all the assignments that particular professional has done, and out of this attest function, how many attest functions has been qualified so far, and how many attest functions has not been qualified. And maybe based on, it is not that if an unqualified report has been given, the professional's job is not up to the mark. But the point is, even if a speckless and without any qualification attest function has been discharged, such a COP renewal application will be taken for scrutiny, and the fundamental is documentation. He has to come out with, okay, if I have done 17 attest function, I need to come out with an explanation why I have taken that particular stand. The documentation part. And if you look at today's afternoon session, Mr. Vivek Krishna Govind, we always call him as the Bhishma, the Kerala's chartered accountancy Bhishma's son, Vivek Krishna Govind. He is from Cochin. He will take us through the audit documentation, SA 230 and SA 315 and SA 330 on identifying and assessing the risk of material misstatements through understanding the entity and its environment, and the auditor's response to assessed risk. So these three standards he will take us through. And all these gentlemen, they are having rich experience. They are coming from one of the most experienced and long-standing firms, and they are coming with examples, illustrations to make these standards more practical and relevant. Standards per se, maybe if I go back if all of us go back to our student days, standards per se may not be lucrative to read and understand and appreciate, but it will be most interesting if you link with the issues, situations and examples. Tomorrow we have two eminent persons, Mr. Chinnasamy Ganesan. He will take us through the new and the revised reporting standards, SA 700, 705, 706 and SA 701 on communicating key audit matters in the independent audit report. We have another person, Chennai partner of a very famous firm, PR Prasanna Verma. He will be with us, a very senior person among all the speakers here. So the last speaker, he will take us through, especially tomorrow's afternoon, the going concern concept. Today, that's a very big threat. There are issues which actually threat or they actually reduce the speed of an organization and the inability of an organization to proceed further for various reasons. And for example, today organizations who are under the stressed assets criteria, they find it very difficult to actually move forward. And in that scenario, how the auditor has to comment upon. And there are innumerable instances that come out where situations are very unique, new, and maybe even sharing of experience only will give us the confidence. And these gentlemen, they have unique and innumerable years of expertise. They will share with us what as a professional we need to do. And last but not the least, he will take us through the findings of FRRB board for non-compliance of standards on auditing. Very, very important aspect today. Especially FRRB is a board which actually appoints professionals with a minimum of 20 years in experience and above to independently review the listed companies' audit reports. This is a unique opportunity even for professionals like us to enroll with FRRB to be an independent reviewer. In that sense, you have two experiences. Maybe as an auditor, when we sign a balance sheet, a financial statement, we would have overseen it. But as a reviewer, when we come across when we review the financial reports and the audit reports and the documentation part of it, we will definitely, our memory will go back to our experiences. Oh, these are the places where I should have also been careful when I have done a particular audit. Because the dimension will be different when we do an audit and when we review an audit done by somebody else. And that's a very unique experience. We have heard from very senior people that reviewing an audit report, reviewing a financial statement of a listed company actually gives them an immense experience, and in the process their quality of doing an audit in the post review of listed company FRRB assignment, their quality is much more better, because what are all the areas which they would have missed out in case, and these experiences plugs those loopholes. So with this very brief, I welcome each and every one of you for this 2-day, 12-hour unique program with immense knowledge and content. So I request each and every one of you to participate, ask questions. We have requested each and every faculty to spare 15 to 20 minutes of their presentation time at the end to answer your queries. We'll have Mr. Lakshman here, and our other staff will be here. Mr. T.V. Srinivasan, the backbone of our SARC, will also be part of this today's program. And kindly share your queries to them, and all these queries will be addressed by the respective faculties. Thank you, one and all.
Thank you very much, sir, for your welcome address and giving an overview of the entire program structure. And I request our Gopalakrishna Raju sir and Madam R. Kamavati to present a shawl, around the shawl to the chief guest, and welcome him with the dry fruit bouquet. I request our Joint Director, Dr. P.T. Giridharan, to introduce the chief guest formally.
A very good morning to all of you. On behalf of the Southern India Regional Councils, we have the pleasure and privilege of inviting Sri Ambalawanan, Indian Accounts and Audit Service. Basically, Mr. Ambalawanan is a graduate in science and a postgraduate in environmental studies and a master's in remote sensing. He joined the Indian Accounts and Audit Department Service in 1994 and started his career in 1996 from the Principal Audit General Audit of Tamil Nadu, and then switching over to Mumbai in 2001, and Director in the C&D Age Office, New Delhi in 2004, and he was also an officer on special duty, IWAD Department, London in 2006, and he also served in the Accountant General Office in Thiruvananthapuram. He was also served as the Executive Director, T-Board in 2010. He was an Accountant General in Odisha 2015, and currently a Principal Director, Commercial Audit and of Chennai in 2018. So thank you very much for accepting our invitation and be a presenter in this August audience. Thank you.
I request the dignitaries to proceed for the lighting the Kuttuvilakku as a mark of inauguration of this program. I take the liberty of requesting our P.S. Kumar sir also to come to the lighting and today's faculty also to please kindly. I request our Mr. Nabirajan of the Office of the Commercial Audit to join in that Kuttuvilakku ceremony. I take it as a privilege to request our chief guest to provide us the inaugural address, please.
Mr. Gopal Krishna Raju, Dr. Giridharan, Madam Hemavati, Dr. Paramasivam, and esteemed and learned professionals here in this place. Good morning to you all. It's a great pleasure for me to be here today with you. It's the first time I'm invited to the ICAI meeting, but we used to have lots of interaction with our empaneled auditors, chartered accountants, and as you know, CAG's audit concentrates on public departments where the government money is spent and also government collects its revenue. But if you see in India, the total economic sector and the financial regulations need to be handled at the level of chartered accountants. Because though the regulatory mechanism of the government provides the CAG's mandate for public auditing and accounting in many states, it has got its own complexities, processes. As a technocrat, as a person from the science background and technical background, when I joined Audit and Account Service, I was really confused. How do I go and work in a department where I don't even know? And first of all, I am a sportsman, I used to love to play. And audit and accounts, why audit and accounts? I cannot go. This is my experience, I am just telling you. When I was allotted, initially I was allotted for IRS, I didn't go. So there was some confusion in my filling the option. So again, the DOPT sent another letter, you better go and join immediately in Shimla, in the National Academy. So my father was a village Karnam, Kanakpilla. So when this letter went, he took that letter and he asked me, why did you not go and join the service which was allotted to you? I told, no, I am not interested. I will do something else, I want to go abroad. Then he had lots of friends in a place called Periyakulam, where lots of his Brahmin friends advised that, ஐயா நீங்கெல்லாம் ஊருக்கு தான் கணக்கு பிள்ளையா இருக்கீங்க, உங்கள் பையன் வந்து நாட்டுக்கு கணக்கு பிள்ளையாவார் அப்படின்னு சொல்லி அக்கௌண்டன்ட் ஜெனரல் ஆயிடுவார். ஸோ அதனால இது ஒரு ப்ரெஸ்டீஜியஸ் சர்வீஸ் அப்படின்னு சொல்லி சொன்னாங்க. I was a little confused because I have no accounts background. Auditing, I always used to think it's such a complex job, and it is so. Then I told my father about my liking, and my father told me only one thing. You go to the academy, if you don't like, you take 1 month's time. On the 30th day, if you don't like, come back. So I went to the academy. Till today I have not looked back. So what I mean to say that it is such a wonderful job, and it keeps you always with knowledge. Auditing is a job can be done only with knowledge. It's a knowledge base. You have to develop knowledge. I always used to see every time when I go to this my office, ACIA, I wanted to come here one day to see what these things are happening, because every day I see lots of activities in this particular place, and I know passing the examination for chartered accountancies or all these things very, very tough. And we also have lots of chartered accountants in our service. But okay, so when we take such a challenging career in life, because these are all challenges, because if you want to achieve certain levels, chartered accountants play a very important role in managing the compliance to the financial regulations of the country. And we are a growing economy, particularly India is a country where the economy is growing, and with this kind of a massive, overwhelming population, and the growth is phenomenal and incremental over the years. So economic activity automatically goes up. So when you have the economical activity in this rate, we also need a professional to support all kind of levels of businesses. Now we have public sector undertakings. Public sector undertakings, you have a robust mechanism for auditing and accounting. You have statutory auditors. They do a professional auditing of these institutes, entities, and the C&AG audits over and above the chartered accountants to ensure that nothing goes wrong in these kind of entities. Then you have listed companies, big companies, you have various regulatory mechanisms, SEBI, ICAI, and so many standards are set based on the international best practices. But to ensure that these practices are meticulously followed or not, we need the professionals who can be independent and make it very clear that these standards should be adopted by all means. So over a period of time, we all know that there are lots of scams in banking sector, in accounting. Even the international companies who are doing who are doing the auditing firms in our country, they are also on the wrong side. So when all these things are happening, the government always thinks that it is better to have some independent body. So that is how this National Financial Reporting Authority has come. I am sure even this mechanism will set in over a period of time, and even in that kind of an authority, who could do the examination of the cases? Who could be able to actually review the cases? It is only the professionals. No outsider can come there and examine a case which has been professionally done. It's like how you have a medical board. An action of a doctor, a treatment given by one doctor can be examined only by the doctors, not by anybody else. So therefore, I don't think there could be a problem in this mechanism, unless otherwise, if there are anything which is going to curtail the independence of the already existing regulator, that need to be addressed in a proper manner. But otherwise, these mechanisms keep coming and going. But then as a professional, I'm sure whatever you do, it will be in a very clean and transparent mechanism. And in future, the companies which are engaging the auditors also will be seeing through the credibility of the auditing firms. Because many a times what happens, I am seeing at a local level, good business houses in Mofussil area, they use the local people who are not qualified auditors. They are basically, based on their experience in working in some department or over a period of time, they have developed skills in compiling accounts and making audit statements and submitting returns to the tax department. They are relying on them. But whereas I've seen the small business people, they've used the professional help, bigger players, bigger auditing firms to come up very nicely also. Those guys who are doing a good business, going through the unqualified auditors, suffering also, both ways. So what I am trying to say is, we need to work at the grassroots level, because there are lots of requirement for good consultancy. Because people want, you can see each and every sector, particularly we are having a clientele which is at a particular level. At the chartered accountants, you all will have, who will come to a chartered accountant? Those persons who know about law, who knows, who has got certain level of turnover, they will come to you. But there are lots of people, they do a good business, but then their financing pattern is so bad. I was just discussing with him that, they take loans from the local people, they don't know where to source the fund, but they do a good business, but they can never come up in their life because they don't get a professional advice from a chartered accountant. So my suggestion for the council is that we need to reach out to the grassroots level so that the compliance to the financial regulations improve over a period of time, because this is the first time we are seeing after implementation of GST. You must have seen, I think now lots of people must be approaching the professionals also for filing their returns. They are not having any clue and the system is just setting in. So over a period of time, I am sure that there is a lots of requirement for the professionals to help the economy to do better, and also to ensure that the compliances are made in a proper manner. And I also feel that in CAG audit department, we do lots of IT audits, system audits, and in the government system, we all talk about very big things, but unfortunately many times the re-engineering process fails many times. We do the same mundane way of doing the manual thing, convert into a IT-based system, which doesn't reduce the workload, which creates more work, some kind of a cumbersome process. So lots of system design has to be done at the business level. I find that lots of tools are available now for accounting as well as for auditing also. And these kind of tools should be used at your level for ensuring a proper compliance to the tax laws and whatever you are looking at with your companies. And basically, the present situation is that the awareness among the people on the chartered accountants, if you see many business houses, even as medium range in the Mofussil area, they all feel that chartered accountants are somebody who are at a very high level, who are not meant for them. But that divide, the council should be able to break it, because that's a must actually. I feel that more compliance to the laws will come only when they come to the professionals. This is my bottom line I wanted to suggest to you, because all of you should ensure that even a small player who wants to do something through you, you help them, because then only this inclusiveness will come. Otherwise, we are looking at big firms. Big firms will always exist. They will change you and another person, it will keep on going. But then you create more people to come to you, so that the regulation of the government, everything goes in a very smooth way, and their economy will also improve. And I also feel that this local bodies are one thing where the CAG audit cannot do it. I mean, CAG audit, if you see the entire this thing, we only do a sample. We do a kind of a risk assessment and we select a few audits in the entire public sector, even the government. But there are lots of opportunity for the professional chartered accountants to enter into the government sector, where you can really contribute much. Not only doing at the certification level, or also suggesting, giving a consultancy for better management of their resources. So you need to explore all these opportunities, and CAG's office are not competitor for you, because you are always working for us. Like how we see, when I have 117 companies under my jurisdiction all over South India. We see if the company is properly audited by our statutory auditors, we are happy. We don't select them for audit, and most of our accounts audit, based on the auditor's assurance, we finish it off. We don't actually take it, because we don't have that kind of a manpower to do an audit. Unless otherwise the auditor gives a kind of a signal, we don't enter into this thing. Generally, that's the trend we follow. So CAG's audit or chartered accountants audit, whatever the thing, we would always take ICAI as our important supplementer, and CAG cannot replace this one, and we want your support in managing the public sector auditing. In fact, nowadays the CAG audit also gets into collecting details of, we also do this, like for example, if we find a contractor who is not doing correctly, who is doing all these things, we trace down those records from various these things, and we also trace down their accounting statements produced by the chartered accountant, and we also see the credibility of the chartered accountant. Nowadays we are getting into a kind of investigative audit where there is a substantive issue identified or a fraud is looked at. So therefore the risk of a chartered accountant has also gone up, because you don't know, because every agency is looking at the chartered accountant's report only, straight away. If you see, like even CBI, first thing they will see whether it is there in the CAG's audit report or not. Because I know when I was in Bombay, my batchmate used to keep on coming and sitting with my office. I say, when I am doing an audit, I cannot give you any information. Only when it goes to the parliament, you can take it. So basically they will collect it from the inspection report, they will smell it, then they will go and find out who is the auditor. Because definitely see that kind of evidences, it will give an indicator where the evidence can be collected. So they will meticulously go for all these things. But so far, nobody has pointed fingers at the chartered accountant who is doing the supplementary audit or any other this thing. But we don't know in future. Sometimes they may attribute motives, a collusion between the company and the chartered accountant. It's a word of caution for all of us. It may happen to us also, because the failure of audit is a very serious flaw in our department. So you should ensure that there should not be any failure of audit. So similarly, there are lots of risks also in the times to come. So the system should protect us. That's the point ultimately I want to say. The procedures, whatever we establish, the standard operating procedure when we audit, that should protect us, that it's a professional job, we follow this method, we uniformly follow this method. Whatever, because we don't know what kind of a companies, how they are maintaining accounts, how they are trying to cover it up. It can happen, oversight may happen at any point with any firms. So with this, I would like to thank you for inviting me, and this is a wonderful audience I am seeing, and I wish you all the best for your today's session and also in future. Thank you very much, Jai Hind.
Thank you very much, sir, for your inaugural address covering the role of chartered accountants in the public sector undertakings and suggestion to reach out to the grassroots level business enterprises in the country. And I would like to request our past chairman, SIRC P.S. Kumar sir, to come forward to present a memento to the chief guest as a mark of our respect and gratitude to the chief guest who has spared his valuable time to be amongst us and sharing his thought process on the CA profession. I request our CA or Hemavati Ramachandran Madam to propose a formal vote of thanks for this inaugural session.
Good morning, members. We, the members, thank ICAA and AASB board for organizing this 2 days program on auditing standard. The board is conscious of the fact that for ensuring quality, it is important not only to have a body of knowledge in the form of auditing standards, it is equally important to see that the members are aware of the standard and are able to apply it appropriately. We thank the ICA and ASB board on this behalf. And to start a good event, we need a good vibration. We, the members, immensely thank the chief guest, Ambalawanan sir, IAS, Principal Director of Commercial Audit, ex officio member, Audit Board, for his gracious presence in the inaugural address of the 2 days workshop. As chartered accountants, more as citizens of India, we thank him for the high concern he is showing on the economic development of India. Finally, he said, to protect, we need some, standards. That's what we are doing. This is a system, the right word used is, the system should protect. The system should protect. That's why we have developed and issued so many accounting standards. So, I thank him for the high concern he has shown on the country. We members and ASB board thank the SIRC for extending its cooperation in organizing this event in a grand manner. Finally, members who have come in good strength, a program will be considered as successful. We see so many criteria. The date on which the program is conducted. It should not fall on our crucial date. The topics selected, good topics are selected, and the speakers, how they are going to deliver. I am sure the speakers are very good. Finally, the numbers, how many members attend the program and take the knowledge to their office. Good numbers, sir. On behalf of ICA, we thank the members coming in good strength. Thank you so much.
Thank you.
Good morning to the fellow colleague members here, and at the outset I thank AASB for holding a session on the standards and auditing. Just to add some more perspective to what Mr. Gopal Krishna Raju elaborated in terms of importance of standards and auditing. Just if we quickly look back as to what we do when we carry out an attest function to ensure the financial statements are representing a true and fair view. We ensure that the entire revenue is properly recognized as per AS9. We ensure they reconcile with the GST returns. We ensure the closing balance of GST matches. We ensure for gratuity the take-up and actual valuation, the disclosures are properly made. To comply with the related party transaction, we take care of the registers under Companies Act. we see all transactions, whether they come there and whether they are reported under AS 18 requirements, whether they fall under the definition of AS 18, where the presentation is as per the requirements of Schedule 3 to Companies Act, and so many other things. We take a lot of efforts to ensure that the financial aid statements that we sign are in fact true and fair, are within the four walls of all the laws. They disclose everything that the accounting standards and the Companies Act requires. We ensure it is pakka, it is 100%. By the time we sign the accounts, we ensure that the figures are properly tied up. We do a casting, totaling exercise, schedule to subschedule to notes, and then to the financial statement up to the trial balance. We do all this work to ensure that the financial statements, which are ultimately the responsibility of the company. The company prepares the financial statement. For it to be perfect, we ensure that it abides by so many other laws. Now, if we slightly go back and see what we do to our work as auditors, in the first paragraph of our audit report where we spell out our responsibility, we say the financial statement is that of the management, but we have carried out the audit in accordance with the standards on auditing issued by ICAI. Now, theoretically, if we see the standards on auditing, it says you need to first hold on a meeting amongst your team members, identify the significant class of transaction, do a risk assessment at assertion level of the significant class of transaction, then devise and then find out what are all the controls that are existing for those significant class of transaction, then find out what is going to be your audit procedure to verify those controls, and so elaborate. So the standards on auditing ask you to do all these things, and we, when we certify or give an audit report, we say that we have complied with all these things that the standards on auditing are asking us to comply. Just as we sign the audit accounts saying that it has complied with GST Act, Accounting Standards, Companies Act, we also sign the audit report saying that I have done all the work that the standards on auditing is requiring me to do. Now tomorrow if someone is going to question us, sir, SA 315 says you are required to do this as per para 4. Now tell me, sir, have you done it? Are we in a position to tell them that yes, I have done it, see this document? Parallelly comparing with the accounting standard compliance, if someone asks us, have they got actual valuation? I said, yes, I got it, see the financial statement, I have given the disclosure. Now if someone is going to ask us, have you completed standards on auditing, show me the working papers, it is definitely going to be a very tough time for us. Now if you are going to ask me, Sanjeev, if someone is going to question me like this, yes, even now currently the disciplinary committee or the disciplinary directorate, people who are there to review our work, what they do is typically this. They ask us a question, see, I see this thing in the financial statement. Now as per standards on auditing, so and so paragraph, you are required to do this. Did you do this? Have you done it? Then show me a document. If you have not done it, then why? Okay, then there is another paragraph which says this. Have you done this? No. Why have you not done? I have this alternate mechanism. Where is this given the standards on auditing? Meaning, just like to ensure each and every transaction is within different acts, similarly our audit is also expected to be in line with the law. Law is a wrong name, but I will say the standards on auditing are now imposed on us as if it were a law. Each and every paragraph in each and every standard has to be complied with by us in substance. We need to have a proper document to say that this para wants me to do this, I have done this. And it might even become an advantage to us. Someplace, suppose the standards on auditing does not envisage a scenario, and if it does not address us that, we can say, Institute, you didn't ask me to do this, I didn't do it. And this is precisely the things that are happening before the disciplinary committee. This is how the judgments at the disciplinary committees are rendered to frame a chartered accountant as to being professionally negligent or otherwise. This is the way that they want us to do the work. Now this disciplinary committee cases before the disciplinary committee go on the basis of some complaint by some outside party or by the basis of some information that is there in their hand. Unfortunately, from now on, we are going to have this board called NAFRA. We all know that is so draconian on us already. And there, the cases are going to be taken up suo moto. So it is not going to be like our 1432 assessment. Some basis on which they are going to take up accounts. They are going to see what the auditors have done in that, see their work, ask them questions like what I just told, ask them whether they have completed standards on auditing, this, that. It becomes so imperative on our part to ensure that this whole bundle of standards and auditing are being complied with it. I'm sure that such experienced chartered accountants who are sitting before me, we would have done everything that is required under the standards and auditing. Just that the way in which we would have done, or the execution, or the outcome of the work, or the documentation that we maintain may not be necessarily in line with the standards and auditing, but it's a sorrowful fact that we need to have it. The demand of the day is that if the standards and auditing want you to have a document like this, yes, we need to have it. Now, if you are going to ask me, Sanjeev, is it going to be an easy task or tough task? It is a very difficult task. First thing, for our own self to apprehend the fact, accept the fact that standards and auditing want me to do this 8-10 items. SA 315 says this 25 paragraphs I have to complete. That is going to be difficult. Even more difficult is if you take every standards and auditing, it will say you discuss with management this fact and understand their perception of this. Now, the first thing which I told, like you need to discuss among your team members on the assertion at the financial statement level, you need to identify assertions and then identify risk on this. Assuming you go to your client and say, Acha sir, tell me, what is your assertion of the risk that exists in the financial statement? You say, yarukku risk? Ungalka, yanakka? Then if I tell them, no sir, for you also there is a risk, then I take him 1 hour an auditing class and say, this is what you are required to. He say, adella seri sir, na enna pannanum. So it is going to be a terrible task for us to make him accept to this fact and bring him in line with what we want, what the institute wants from us, what the NAFRA wants from us. So this entire scenario, for us to practically ensure it happens, I know it is going to take so much time, but it is all a process. Maybe as on date, very big companies, they are maybe complying with this, they are able to give auditors the documents that they want, but definitely not even at the second level. Leave alone the third level and grassroots level companies, even at the second level of companies, it's an impossible task for us to make them understand that these things are there. These things are there, you are required to do this, you are required to have a committee, have a discussion on the financial statements, identify which are the risk prone areas. No one is going to do. But we need to ask them to do, because that is what our standards and auditing says. And though I am saying this, for a matter of fact, I will say it is only these efforts of the Auditing Standard Board to write these standards and auditing so detailed that is taking us more nearer to the global chartered accountants. See, the global chartered accountants, the international chartered accountants in the US, Europe and Australia and various other countries, they are spoken so high because their standards and auditing and whatever is being followed there when they conduct an audit is of this high standard. And the AASB is right in doing and expecting us to, do an audit at this level. We should not reduce our level and say, Alparal sir, it doesn't work out like that. If this standard says I have to do it, I have to do it. In fact, all the standards are so beautifully worded that it says, this is what you are required to do, this is how you should be doing it, and the result of this, you need to handle it this way. If you are not able to handle, what you are required to do. So none of the auditing standards, standards on auditing, if you see, will have loose ends. How do I address this? That will never be a question. He will give an answer to every question that we ask. In fact, the current set of standards on auditing which are issued, they are so elaborate that even says you scenarios. Like if when we go through SA 240, we will observe, like earlier we said, how do I identify fraud? We will say that we need to see whether there is an incentive. Now incentive means, what is incentive? How do I know that this is an incentive or not? The institute does not stop here. In standards and auditing, in its part where it says practical application of standards, it says what are all the possible incentives that could be there for management, what are all the possible reasons for which it can do fraud. It is not just 1 or 2, it gives 15-20 cases to you. And if it is more than this 15-20, if you come across something, please write in, they are going to include. The next email you will receive saying, exposure draft on standards and auditing, please give commentary. Whenever I receive a mail like this, first thing I observe is the standard has become 5 pages more. It is having some more text to it. That is the level at which they are working. And they are expecting us professionals also to come to that level and execute the audit in that fashion. All our documentations, everything should speak. Now coming into the first session which I am supposed to handle on fraud, in light of the recent events, the amount of level of frauds that are getting unfolded. The first news will be on the paper that such and such fraud has happened, the immediate news will be that what were the chartered accountants doing. That is the fate of chartered accountants currently in relation to fraud. In such scenario, it only makes sense that the first session on standards and auditing should itself be on fraud. I don't know why I am invited for fraud. That is a separate thing. Keeping that in mind, now if you go into this SA 240, which says what are all the responsibilities of an auditor in relation to assessing a fraud or assessing a risk that might arise on account of fraud, and ultimately leading the financial statements to be materially misstated. That is what this standard deals about. So of course this standard is not a forensic standard. This standard does not make you a detective to go across and identify frauds and so. It only elaborates your role in terms of, or our role in terms of, what you are supposed to do to ensure that the financial statement are not materially misstated because of a fraud, which is either unearthed or not unearthed. That is something that an auditor is required to do. Now, for example, the frauds that we are seeing in that case, though the papers flash the news that what were the auditors doing, it is not that the institute or the disciplinary committee asked the auditors. It asks them, you are given a standard SA 240 to identify the risk of misstatement on account of fraud. How did you comply with it? It has some 37 or 38 paragraphs. How did you comply with all those paragraphs? And what comfort you are going to give me that you were not a part of this fraud? You didn't know that this fraud happened. You did all your work, but still it was beyond your capability that it was a fraud, which means the person who did the fraud was far more intelligent than the standard. It's what they want us to prove to them. And when we prove that, we get a green signal from them saying, Acha chalo, you go, you are not at fault. With that, we'll start with SA 240. SA 240, the first few paragraphs discusses on the definitions. The first is on fraud. A fraud, as you all might be knowing, each registration has its own definition of fraud. Fraud as per the standards on auditing is something. Fraud as per the RBI Act is something else. Fraud as per the IRD Act is something else. And Companies Act does not define fraud. It just says fraud. So there are multiple definitions of fraud. Here in this standard, fraud means an intentional act by one or more individuals among management, those charged with governance, employees or third parties involving the use of deception to obtain an unjust or illegal advantage. Technically, it covers everyone who directly or indirectly are in the financial statements. Like the management, if they do some fraud, that gets affected in the financial statement. Those charged with governance, meaning the members of the audit committee, in cases where there is an audit committee, or the non-executive managing directors, non-executive directors, these guys, if they do something, and that also of course ultimately going to affect the financial statement. Their own employees, if they do the fraud, which is most often the case. The outside parties, when they do a fraud on the company, like a borrower, or a debtor defaulting, and he doing some fraud by which my debt becoming redundant. So that is a fraud on the company by an outside person. Those are the frauds that are covered in this standard. And error is an happening which is unintentional. Fraud risk factors are events or conditions that indicate an incentive or a pressure to commit fraud or provide an opportunity to commit fraud. So if you go through this entire standard, which we will also be seeing, what an auditor is required to do is a study of these risk factors, to study if these risk factors exist when you conduct an audit or when you do an assertion level identification. The standard asks us to identify whether any of these risk factors are there. Then in the second part it says, if you find out what you are required to do. And what the characteristics of fraud, financial misstatements arise either from fraud or error. The difference between fraud and error, which is something we all already know, is that the underlying action of the fraud is far more intentional. The responsibility and prevention and detection of fraud. So this is where the institute saves us. So the institute, as in the standards on auditing, save us and say that no, you are not responsible to identify any fraud here. So if someone says that what you were doing when this fraud happened, we can comfortably say that it is not my work to identify fraud. In fact, it is not even the management work to identify fraud. It is everyone's work to ensure that the places where possible frauds are happening are being informed, are being continuously identified, and those loopholes are plugged. And when I do the audit, I am also required to identify whether there are areas in the financial statements and transactions where a fraud could happen, is what I am required to identify. Then objective of the standard is identify and assess the risk of material misstatement due to fraud, obtain substantial appropriate evidence about assessed risk of material misstatement due to fraud through designing and implementation of appropriate responses, respond appropriately to identify suspected fraud. So these three objectives are divided into multiple paragraphs in this standard when we go through. First few paragraphs will say that how do I identify and assess the risk. It will say that you need to have discussions with these people, then based on those discussions you need to have a finding. Based on that finding, then it goes to the second level, which is obtaining an audit evidence on the assessed risk. Then you need to evaluate those audit evidences and design your responses. Now we will go into the first part, which is identifying and assessing the risk of material misstatement. So this is the first part, which says on what an auditor is required to do to identify the fact that the financial statements have a risk of material misstatement due to fraud. The standard requires that the auditor be professionally skeptical throughout an audit. Generally itself we are required to do it. The SA 200 in itself says that an auditor is required to be professionally skeptical throughout an audit. More so in relation to fraud, meaning when he conducts an audit, when we come across a document, say I come across a set of bills and vouchers where continuously one set of serial numbers are there. Suddenly a new serial number pops up. I am required to be professionally skeptical to ask why a new set of numbers are coming, what is the reason. Then if they give a valid reason, it's a different thing. If they don't give a valid reason and they fumble around, then we are required to assess if this is a factor which can lead to a fraud. Or we find a self-attested voucher which says auto charges 7,500 rupees. We cannot say auto there cannot be a bill, auto can only be self-attested. But then into the fact that it is so huge, that is what is professional skepticism. Whenever you come across any audit evidence or any document during the course of audit, we need to put ourselves multiple questions, both in terms of legal and more so in terms of common sense, to see if this document will stand the test of time, will stand the concept of yes, this is a valid authenticated document. If not, then what? So the auditor shall maintain an attitude of professional skepticism throughout the audit, recognizing the possibility that a material misstatement due to fraud could exist. Notwithstanding the auditor's past experience of the honesty and integrity of the entity's management and those charged with governance, the auditor can accept the records and documents as genuine unless there is a reason to believe the contrary and investigate if required. The next one is discussion among engagement team. This is what I said earlier. So this is a requirement of not this standard alone. If you see across some 14 or 15 standards on auditing, you will come across this paragraph of discussion with our engagement team, which apparently never happens in the practical scenario. In the audit pointer, go to the next audit, go to the next audit, go to the next audit. That's how it practically happens because of the volumes that we deal, the kind of strength we have. It so happens that we are not able to do this actual discussion with the engagement team. There is a para A11, so which is the second part of the standard, which gives application guide on this standard. There he says what are all the things that you may discuss among your engagement team, get their insights. So the standard requires that you need to ask your team, okay, you have reviewed the financial statements, what are all do you think are the high risk transactions? He says, no sir, this year there is an investment in subsidiary, there is a high risk. I observed that compared to last year, this year the sale has increased by 45%, but the gross profit has increased by 85%. Then another person gives another insight as compared to last year, this year the traveling has increased multifold. But I was given to understand that the MD was sick for almost 6 months in a year. So informations like these, which your audit team already has, maybe 1 week or 10 days into audit, or as a part of their interim audit, or whenever, or as a grapevine they would have heard it from their client. All these informations which they already have with them, or the thought processes that your engagement team already has with them, is something you need to discuss as an engagement partner or an attest partner. You need to discuss with your team, and from that you need to identify if you can draw any inference or draw any issue which might get culminated into the fact that it is a risk of a fraud that can happen or that could have happened in the financial year. Discussion among engagement team. The discussion can take place with particular emphasis on how and where the entity's financial statement may be susceptible to material misstatement due to fraud. including including areas where the fraud might occur. SA 315, which covers the auditor's response to assessed risk, require discussion among the engagement team members and the engagement partner on those matters which are to be communicated to other team members who are not as a part of the original discussion. Next one. So post you discuss with your engagement team as to what are all the areas and what is their thought process on where are all the possible frauds could have happened or will occur in future. Then the standard requires that, okay, this is something you need to do internally. Now you need to get on floor, get your hands dirty and do certain other things to ensure that the fraud risk factors are identified. Now this is precisely the question that will be before you by NAFRA or by the disciplinary committee or by anyone who is going to investigate fraud. They are going to say, these were the things that you were required to do, did you do? So the first one is make inquiries of the management. The standard requires that you need to go and inquire with the management. What is their appetite of fraud? Where do they think the frauds can happen? How much they fear fraud? What is their perception about fraud? Where do they feel that fraud is supposed happening already, or where they feel there are chances that the fraud might happen, where they feel they need us to further verify. Like for example, in a company which is more into a dealer-oriented business, where a dealer gets commission or a dealer gets cash discount, the managing director might feel that, auditor sir, I don't know, but compared to last year I am paying huge cash discounts. But what I observe is that my liquidity position is often very weak. I doubt if people are intentionally giving me post-dated checks and my guys are also being connived in this and they are holding the checks and depositing it late. This is one area where I find that a fraud can happen, which is very true. So what is happening, this person says to him, currently my accounting system is such that the moment I put an entry, bank account debit to debtor, immediately cash discount will get credited to you. Don't worry, I have 3 months time to get this check realized. The BRS is also something I prepare only at the end of month and the auditor is going to verify it only at the end of year. What I will do is, you deposit, you get 3% cash discount. You pay me 1.5%, I will deposit at this check at the end of say 55 or 60 days only. You arrange cash then. Now this is a very classic case of fraud. This is something when you discuss with the management has a fear. They might say to you that, sir, this is something that is happening. Can you please look into? Then what is the next stage? Similar to this, there are multiple discussions that you can have with the management. You can ask them, okay, now when he says this, we can ask them, Achha, you are telling this, what did you do? What internal control process did you put in place to see that a fraud has happened or is not happening because of this? What are all the kinds of checks that you are having for this? Do you have an internal committee which goes on continuously monitoring these kinds of transactions? What other transaction do you perceive? Now that you are saying me only one transaction, it is because this year your profit has reduced. Despite of this, there could be some more transactions also, no? Where there are actually fraud-prone areas. What are those transactions? There are further discussions. So these discussions, of course, without any doubt, should get absolutely documented. You need to write to them that these are the discussions, these are the minutes of the discussion we had. Get the sanctity of that. Get into the audit, that need to get into your audit file. Similarly, he says, make inquiries with the internal audit function in this regard. So obvious, when the management feels that there is an internal control lapse or so many complex transactions that an internal audit is a must, it is only then or forced by legislation they are going to have an internal audit system. Maybe by an external auditor or an internal auditor. That internal auditor, of course, our own standard says that we need to evaluate their work. Despite that, we are also required to ask them, what is your thought process in terms of fraud in this organization? Now that you are doing internal audit throughout the year, you are giving me quarterly reports. How are you perceiving fraud in this organization? Where do you see possible frauds can happen? What is your work in that? Is a part of your scope to identify these things? What all controls did you verify? Now earlier I spoke to your MD. He told me that in relation to cash discount, he feels something is there. He is smelling some rat. Did it come to you? Did you do some audit function on that? Do you have any reports that you need to give to me which I need to consider in my financial statement? Things like this. In fact, if you go to the application area, he gives you another 15 or 20 more discussions that you need to do. What I am saying is, with just a simple example, is giving you further discussions also. How many team members, do you visit each and every dealers, do you go across the country, or do you stay put here, have you carried out a system audit, things like these, which the standard requires you to do. Next it says is, make an inquiry to those charged with governance. The first one is on the management who are part of the operations. Next one, who are charged with governance, whose sole work is to ensure the ethics is maintained in the organization. The standard says you go and talk to them, you ask them what is the instructions, or have they spelled out their thoughts to the people below them, that is the management. Like if you take any bank or any bigger organization, it will have an audit committee. The audit committee and audit committee chairman are required to maintain the sanctity of the financial statements. So now this audit committee has to say, in terms of maintenance of sanctity of financial statements and operations, I have asked my team to be like this and all. I have asked them to ensure that there should be no fraudulent activities. If they come across any fraud, it should be immediately informed to every member in the audit committee by way of a circular notice. I have given instruction like this, and I observed that in the last audit committee meeting, the risk officer came and told me that yes, something has happened, we are in the part of investigation, but up to now I don't have any update. So when you speak with those charged with governance, of course, with the amount of imposing regulations that is there on independent directors, the chairman of audit committee, they are not, or they most likely will not hide facts to you. In fact, they will be overwhelmed to share their insights on the negative sides of the company, saying, sir, I don't know, I attend a meeting once in a quarter. When they come to the meeting, everything looks very rosy. They give me a very clear picture of everything. But when I ask them some in-depth details, somehow these people are not coming with those details back to me. I find it very difficult to go in depth into a transaction and see whether everyone here is true. This is something the audit committee chairman is in fact actually feeling, but you would have never told it out. Now this standard requires that you actually make an inquiry to him and you get this detail. Assuming you don't do this, tomorrow if something happens and the chairman will comfortably say, I knew something like this is happening, but no one came and spoke to me, so I couldn't tell anyone. So that is where we will be blamed. So we will be asked, you were asked to do this, why you didn't do? I guess you are able to understand the seriousness of what is our role in these things. Next one, he says, identify unusual and unexpected relationship. Theoretically, this is only a fallout of all the earlier discussions and discussions with your team. Of course, as a part of your analytical review procedures and other things, you can always identify an unusual relationship. The relationship we also currently see. Someone comes into the board. Earlier that seat was occupied by an independent director only. They had only 4 directors. Suddenly they bring in one additional director who is in fact relative of the managing director. What is the reason to bring in that? Now they see that the CFO, MD, the additional director, they all are coming from the same family. Earlier all of these were independent. They find that one company secretary was actually performing very well. Suddenly he is being removed and some other company secretary with very least experience is being put. So things like this, these are the unusual relationship or unusual happening that you might come across when you actually do an audit, which are actually not there in the financial statements. When you come across this information, you are required to infer or required to identify what could be the fallout of this. What all could it have impacted? Was there any transaction in and around the time the company secretary had to leave his job that forced him to leave his job? Like I was given to understand in one company, the CFO of the company quitted on 28th March because the MD asked him to pass some dummy revenue entries. He said, nothing doing, I'm not going to do this, I'm going to leave. Now you are going to audit the financial statement, say in the month of April, end or May. For you, the CFO who has left on 28th March, as on 31st of May, is actually not a news. I mean, it's not a big information, it's only news to you. If you go into the substance of this unusual happening, because normally a CFO is not expected to leave an organization before completion of audit. But now here in this case, you observe him to go out, even though the financial year is just about to close. Who is going to take care of the year-end financial closing and all? Now this is what skepticism is all about. You are required to inquire what has happened in and around that time. Think of the possible ways which would have pushed the CFO to go out, and then with that skepticism, when you see the accounts, you might in fact identify that this fraud has actually happened. They have in fact over accounted their revenues with some dummy invoice. So that is what this last part on unusual unidentified relationship is about. This slide will come to a bit later. The next one, auditor's response to risk of material misstatement due to fraud. So out of whatever we did earlier, right, discussion with the management, discussion with the internal audit department, discussion among team members, we would have made some inference. We would have come across, okay, these are the things. Not necessarily everything could be a factor leading to a fraud, but we would have come across, okay, this is happening, this is happening, this is one critical area, this is one critical area. Having known out of all these discussions that these are the 8 or 10 items that you are required to do, then what the standard requires or expects out of you is, now that you have identified the factors or the risk factors, devise your audit plan in such a way that those risk factors are kind of mitigated. You eliminate the risk of the financial statement getting materially misstated because of those factors. The standard says you need to assign and supervise, which is of course, once you know that in the sales there is some issue, you need to, earlier you would have told that do vouching for say 50 days, high value vouching. Now you need to assign one more person and supervise him more diligently to ensure that he cuts that risk. Like in our example of the CFO leaving, we should say, okay, you do one thing, in the last month revenue, you take that, you see the complete cut-off procedures, you do one thing as a part of the confirmation that you send to debtors in terms of closing balance, you don't do that alone. You ask the client to send him the complete list of invoices for the year or for the last 6 months, including the outstanding balance, and then get a confirmation as to confirmation of transaction as well as balance. Now what will happen? They would have raised an invoice. By May they will tell, no sir, it's a sales return. So we didn't sell at all, it came in. Since it is a fraud, more likely than not it is going to be absolutely perfect. They would have paid the excise duty or GST when the goods went out. When it came in, they would have properly taken the credit back. There will be a proper tax invoice to it. The goods should have actually moved out. They will give you a lorry receipt. They will give you the security register where the item out is mentioned. Everything will be so absolutely perfect internally that you will not be actually able to identify this fraud. So the standard says you go one step further. You assign the role to your team accordingly. You tell him what additionally he has to do. You do, assuming you say him, you also write the list of transactions when the confirmation goes. There are chances he will get caught. We don't know. If the other party is also in connivance, maybe you will lose. That's a separate part. But there are every chances that you will get caught. He will say, sir, no sir, these 3 invoices, எனக்கு அதுக்கு சம்பந்தமே இல்லையே sir. இது யாருக்கோ இது. What? 1500 tons of paper. Where will I keep this sir? I am not such big a buyer and all. This is fraud. This is wrong. I don't confirm with this statement. Do you understand? So this is what the standard says. Once you know risk factor, how we are going to address that? Devise an audit plan accordingly. Next it says evaluate. Evaluate accounting policies to be indicative of fraudulent financial reporting. Very obvious. You come across accounting policies. We know most of the accounting policies that we see, at least in the mid and slightly higher level of companies, mostly it will be just a reproduction of the accounting standard. But suddenly when you come across those things, you observe something like this. Say for actual valuation, say for the AS15, the accounting policy is that the company accounts for leave encashment as and when it is paid, which is theoretically against the accounting policy, but this has been the accounting policy of the company. We observe that, okay, this is where there is some issue in this. Okay, fine, let us see where they have gone wrong. Why they had to change this policy like this? Why they didn't want to do an actual valuation? Or assuming we come across an accounting policy where it says the estimation for the purpose of say closing provision on warranty is slightly very high or very low as compared to what it is actually to be. So these accounting policies will also throw some light. Then the standard gives some very important line, so which is something even I didn't expect when I read this. It says, when you do your initial study, you do an analysis of risk factors on fraudulent misstatement of the financial statement. This applies for every other thing. As far as revenue recognition is concerned, have a rebuttable presumption that it is always a fraud-prone area. It says, irrespective of whether there exists a risk or not, risk of other things on fraud or not, revenue is always a fraud-prone area, which means as far as your procedures to conduct an audit for revenue is concerned, you need to always have in mind that there is going to be some fraud in it, or there are chances every fraud in it. The the standard further goes on to say that if you feel that rebuttable presumption is wrong, if you feel that I don't have to persevere because sir, income da, he has given this property on lease, every month he gets lease rental, so it is virtually impossible for some fraud to happen in this income. If you are confirmed of this fact, then you fairly document the fact that I don't need to have this presumption, and then don't have this presumption. That's what the standard says in terms of revenue. The next is on auditor's response to risk related to management override of control. This is something we have been studying right from the days we are studying auditing. We always know that where there are multiple levels of control, there are every chances that the fraud is very less. Like someone preparing the voucher, the next person are testing it, there is another person who is authenticating the payment, then there is someone who is taking care of passing the entries. There are all transactions are properly passed to the primary books of accounts. When these things happen, we know that the chances of fraud in these transactions are very less, but then in transactions where the management directly intervenes and says, this is how you are required to do. Like say commission to the sales head or commission to the delivery heads and things, it is something the management straight away says. It does not go through, if you see all the companies where you audit, the appraisal will normally be for all the functional staffs. When it comes to appraisal for the sales guys and top guys, it is something directly decided by the managing director. So where there is a management override of the general control, this is something they will spell out. They will say, no sir, for this we don't have any internal control. This is something the MD directly decides. When you come across transaction like these, where the ultimate person, the management has the ultimate say to say this is how it is, please pass this entry, then you should assume that the transaction could be fraudulent and do whatever it takes to ensure that the transaction is proper. It says, is the appropriateness of journal entries and other adjustments made in the preparation of financial statement. So it's so obvious, because when you make a sale, when you make a purchase, when you receive money, all these things passes through the books of primary entry. There are proper accounting entries that are passed to it as a cash voucher, bank voucher, sale invoice, purchase invoice, everything. But when these are not there, the company tends to pass journal entries. Journal entries is adjustment across accounts without actually passing it through the primary books of accounts. Entries directly hitting the general ledger. These entries are something which the company won't pass unless the management at the the superior will say, you please pass the journal entry and you close. Like say exchange fluctuation, where RBI rate is 69, they say I am getting rates of 70, 72 from the bank. Please put 72. So what they will do? They will pass a JV reinstating the entire return at 72. Why has this happened? This is not completely against the accounting standard. The fact that it is against the accounting standard is slightly different. Now, why at all they had to do this? If you observe, originally they would have passed a normal entry of restatement of debtors with 68 only. Then management will know, Alam Pora, this profit is not enough. Make this 68 as 72. You pass some more. Then they will pass a journal voucher for this. Without passing it through the regular set of entries, they will pass a journal voucher. The standard perceives that by looking at it, you will be able to identify. Then it says, review and evaluate accounting estimates for any biases. A classic example could be, we will take actual valuation itself. Normally we observe that the salary escalation is somewhere around 8 to 10% every year. We observe the attrition rate is somewhere around 2 to 2.5% only. People who come inside the company never go out of the company. The next generation also joins the company. This is what is our perception about the company. But then now we see an actual valuation where we see salary escalation to be only 2% and the attrition to be 45%, which means this is an estimate which the actuarial doesn't actually do. Actuarial asks the company, what are your estimates of escalation, what is your estimate of attrition. Now the company says, when it says this is what it is completely against the actual, it definitely means there is some motive or there is some intention for them to do this, by which reducing the provision, increasing the profit and all. So that's what it says. You need to have an evaluation of business review and evaluate accounting estimates. Then it says evaluate business rationale for significant transactions. So of course this is something we will anyways do. All high value purchases, high value sales, any amalgamation, mergers, demergers that happen during the period, any acquisition, any waive off, any sale of significant assets. These are things we will anyways verify. The standard requires that when you verify this, have a skeptical thought of whether this is for the purpose, whether it is a risk factor. You also do that, is what the standard says. Then it says perform any other additional procedures in these lines. Having done all these things, then the standard says now you have done all the exercise, you have identified the risk factors, you have seen some level of document. After this, you are required to do an analytical procedure performed indicates a previously unrecognized risk of material statement due to fraud. On identification of misstatement, auditor is required to evaluate whether it is indicative of a fraud or not. So what we said, I have done all these procedures, I see the financial statement with this size and I find a misstatement. Meaning in our case the gratuity is underprovided. Now I need to see whether it is an indicative of fraud or it is only by error. They erroneously put the salary escalation and the attrition on the other column and they assign it. If it is only an error, okay. I am required to identify whether it is indicative of any fraud. Then in case of fraudulent misstatement where auditor believes management is involved, then re-evaluate the response to assessed risk. Which is, there was one paragraph which is not covered by this slide. Earlier we discussed, no, that an auditor is required to assess risk. The standard says that once you assess these are all the risk factors, you write it to the management and you ask them what is their perception of it. Like what we said, our team says that sir, sales there are chances. Then one person says that actual valuation there are chances. One person says that they have some bullions in their hands, sir. Bullion valuation there are chances. You have identified these things. The standard says you write these things to the management, identify what is their thought process. What they say, yes, I also know this is the fraud prone area, I have this control. So meaning, how have they responded to your assessed risk is what it says. Now having done that assessment, the management says this is how I assess. Even after all that, you come across a misstatement now. When you come across a misstatement, the standard says, now go back. Go back and see how did the management respond to the assessed risk. So if what you have come across now is because of a management override of control, it definitely means originally when the management responded, they would have camouflaged. They would have told you and lied to cover this. So go back and reassess whatever was their responses for the assessed risk. Then it says, if unable to conclude if the financials are fraudulently misstated, then the auditor has to evaluate the implications for audit. This is the key thing. Now this is technically the result. It says, Acha chalo, now you have done everything. You assessed the risk, you got a response, you devised an audit program, you did an audit, you have now unfortunately or fortunately come across a fraudulent transaction. You have come across a misstatement, you have identified that it is fraud. Now what is your work? What is my immediate work? The standard spells out that also. It says, once you come across that, we'll see in a later slide again, I'll just tell it up front. It says, the moment you come across a fraud, you communicate that to the management. See how they respond to it. If the response is satisfactory, okay. If not, then write to those charged with governance. Example, audit committee, wherever it is there. Write to them that you have come across something like this. Ask them what is the course of action. Get the course of action from them. Now we all need to very clearly understand that once I identify a misstatement on account of fraud, just because that entry is corrected doesn't mean that my role stops. It is not like that. Like for example, I observe that there is an embezzlement, or in an environment where so much NEFT transactions are there, the person who is responsible to pay to the employees, he has the ability to access the bank account. What he does is, once in 2 months for different employees, he changes the bank account and he puts in his name. Now this is some fraud that you have come across. Simple thing is what? Reverse the employee cost, account for a receivable from him, and disclose this fact in the notes accounts. It is not just that. The standard says go a step beyond. Ask what the management is going to do about this fraud. Get their response. Tell the audit committee that this fraud has happened and ask them what they are going to do. Are they going to file an FIR on that employee? Are they going to take the case sensitive? Are they going to file a police complaint? Immediately what they will say, "Illa sir, employee sir, police complaint la, alla வேண்டாம் விடுங்க sir, matter of 10-15 lakhs, அதை நம்ம எப்படியே recover பண்ணிடலாம் அப்படின்னாலே the immediate thought process of skepticism is there is something else. Someone else might have asked him to do something like this. That is why he is doing. Otherwise, an employee மாமனா வச்சானா, they can very well file a complaint. No, tell the police that this person is defrauding the company. They can very well do that. But when they don't do that, and that's what it says, you get the response from the management on how they are going to react on this fraud. If they react in the way you want, or react in the way any normal person will react, a smallest theft of mobile phone, Nokia 1100, if someone steals itself, we'll make a hue and cry. We'll file a police complaint, put it on Facebook, tell someone has stolen. But now when someone is defrauding the company of such high value, if the management or an audit committee is going to take it so lightly and say, it's okay sir, then which means the fraud is just not that. It can be even more. The magnitude of the fraud can be even more. People who are involved in the fraud can be even more. That is what is the thought. That is what it says. See what is their response. Now even after all this, you don't get enough response on this, what can I do? Just by qualifying my financial statement, is it okay? No, no, it is not okay. Because it is a fraud, no, it is not just a misstatement for you to just say the true and fair view is affected. It is not so. It is slightly beyond. You should think that, is it right for you to even continue this engagement? You will say, sir, na qualify pandren pannigo, because 100% shareholders are the person who are part of this fraud. He will say, ultimately the annual report is going to come to me. I am the director of this company also. Na then reply kudukna avladane. I will give the reply. That is not what the standard says. He says, you think whether at all you should continue. Now what level? When you say I am not going to continue, and you say I am going to come out of this audit, I am not going to attest, then they are in soup. It is not so easy. Now with the revised guidelines on auditor resigning during the course of an audit, it is immensely impossible for them to digest the fact that you are going to resign. Assuming you resign, they need to put someone else on audit. They will ask a no objection letter from you, where you need to tell them that the fraud has happened and they are not responding. So this is what the standard says. Once you see a fraud, once you smell something, please escalate at its maximum level, ensure it is taken sufficient care of, and do what has to be done. Please don't take it lightly. It says. If the fraudulent misstatement encounters an auditor from continuing the audit, then the auditor shall withdraw from the audit if appropriate and report to the person who made the audit appointment. Then management representation. So this is assuming everything else goes very smooth, you didn't come across any fraud, audit is ending very happily. Then he says, irrespective of all these things, please get a proper management representation, specifically asking them to comment on fraud. A general representation that I have given you everything, you know everything that I know, I don't know anything beyond what you know, I know that it is my responsibility to prepare the financial statement. These are all general representation which everyone is going to get. He says, please get something in specific to fraud also. He says, responsibility for the design, implementation and maintenance of internal control to prevent fraud is that of management, and the management acknowledges fact. This is something you need to get specifically. Then you need to get from him that fact that he has disclosed the results of assessment of risk of material misstatement financials due to fraud. As I told earlier, first we need to ask the management that how have they assessed the fraud or risk of fraud in this account, things that we discussed. No, he need to confirm in writing that whatever he has assessed, he has told me everything. Meaning, if he has held back some transaction or some thoughts with him, and if he has not told you, later on you cannot be held responsible for that. Because what we did earlier itself, we wrote a minutes of the meeting we had with the management, we rolled it out, we got a confirmation. And we got an additional confirmation that he has told me everything. Later on, he cannot go back and tell, he cannot do that. I have every proof to say that what he discussed with me, I have also proved that he has disclosed everything to me. That is what this management representation is. Then he says, disclose the fraud occurred or suspected involving management, employee or other. This is, some fraud has happened. But I go in the month of July or August to do audit. A fraud happened, say, November of last year. Fraud எல்லாம் நடந்துட்டு police complaint எல்லாம் file பண்ணிட்டாங்க, பைசா எல்லாம் recover பண்ணிட்டாங்க. That doesn't mean he should not say me this. He should tell me the fact that a fraud happened. This was the course of action that he has taken, and this is the result of it. Something is he needs to disclose to me. Of course, the implication is, Caro, you need to report that a fraud has happened in the company. For that purpose itself, he need to tell you. Even without that, he need to tell you this fact, because you will devise your audit accordingly. You will say, Acha, no, this area is a fraud-prone area. Though they have identified the fraud and they have taken care of it, we should ensure that no other fraud has actually happened. So let us divide. So for this purpose, he is expected to tell you every fraud that has happened, and in writing in the representation letter, you need to get from him that he has told you every fraud that has happened in the company. Okay, disclosed any allegation of fraud or suspect of fraud informed by employees, regular. So this is something. So if they have spelled something, some whistleblower activity has happened, they are in the part of investigation, even those things has to be disclosed to you. The next one is communication. We already did. So this is the standard says is, once you identify the fraud, on identification of fraud or suspecting the fraud existence, the auditor has to communicate to the appropriate level of management on a timely basis. Communicate as appropriate to those charged with governance if the suspect of fraud involves management, employee performing internal controls or any others. Determine if the information about the fraud has to be communicated to a party outside the entity. Here the auditor's legal responsibility over his confidence, which is very obvious. So this is the last part which of course all of us will be aware. There is a requirement under the Companies Act where we are required to inform the registrar of companies for a fraud more than 1 crore. If we have identified a fraud more than 1 crore, we are required to inform the registrar of companies. If it is less than 1 crore, we are required to inform the management and through the management to the people who are charged with governance. Similarly, under the RBI also there is a circular which says that during the course of an audit, if you come across a fraud, immediately flare it up to the audit committee. Now, there is a separate guidance note which the institute has issued for compliance with section 143(12) of the Companies Act. That is a requirement to report to the ROC. There he spells out very clearly when the auditor's responsibility arises, how he needs to safeguard himself when this thing comes. How can he confirm? If you read both these together, you will identify that there is some level of, I won't say duplication, there is some level of reiteration of whatever is here because this is the mother standard. That guidance note is only carve out of this standard which says what are all the auditor's responsibility in terms of 143(12). In the last line, I will just elaborate it quickly. The legal responsibility overrides the duty of confidentiality. It means you cannot say no, SA 200 says confidentiality, independence and all. I won't say this fraud happened to anyone, I have to maintain confidentiality. He says nothing doing. The moment you identify the fraud, the legislation says you please say that to the companies, ROC, that this fraud has happened. Don't say the confidentiality clause. We will take care of you. In fact, this one classic case, even assuming the disciplinary committee or the institute high power committee, these people ask you to discuss something on this. There is one thing which you should tell that it is confidential, I cannot tell this. Then they are required to quote this and say no, you have an additional responsibility here, a legal responsibility. We will take care of the confidentiality. So that is what is again spelled out in the standard here. Then he said require, so 143(12) and RBI is given in this slide. Then documentation, very obvious. Right from step 1 of the standard where we said you need to have a discussion among your team members, you need to discuss with the management, discuss with the internal audit team, see the unusual transaction, then send all your identification to the management, get their responses of these risks, then based on that devise your audit plan, then execute your audit plan, get the transaction that has happened, identify it if it is due to fraud. The entire standard has to be documented. I have personally got a chance to meet some of the guys, some of the advocates who represent before the disciplinary committee and the courts for the purpose of disciplinary activity, disciplinary actions against the members. They say the requirement is something like this. Sanjeev, now you have done the audit. Para 1 of the standard says this, Para 2 says this, Para 3 says this, Para 20 says this. So this standard has 37 paragraphs. Please give me a document confirming that all 37 paras have been complied. Flip side, if you have some document, you tell me how that document complies with every standard. We all have one checklist on the standards and auditing which says SY 315 complied, 240 complied, 300 complied, 540 complied. That is not enough. Just like for accounting standard, what we do, AS 9 para so and so for interest, AS 9 para so and so for dividend, AS 9 so and so for virtual certainty, AS 22 para so and so for virtual certainty. So we do a para wise confirmation of the fact that it has completed the standard. Similarly, in standards and auditing also, virtually every para, except for the definition and thank you paragraph, you need to document every para and say, this para wants me to do this, I have done this, and this is a proof for it. Not everything will have proof. Few will have only an elaboration, few will definitely have a proof. Say he says you need to communicate with the management of the assessed risk and get their responses, which is an external document. You are required to say yes, this happened on so and so date, this is the document for this. And dear members, I am telling you this is what is going to happen in NAFRA also. He is going to say, okay, audit accounts, accounting standard, all that is fine. How did you do the audit? What is a law that is binding on you to do the audit? Did you compare with that laws in the standards on auditing? And there we have no other option to say that this para done like this para done like this para done like this. And we need to start creating documents like that. Faithfully follow the standards on auditing. I remember some 8-9 months or even slightly before, in a meeting of Central Statutory Auditors, Institute member, he very clearly told this. He said, henceforth standards on auditing is the Bible, Bhagavad Gita, Quran for us. Every line in that has to be complied with in substance and in spirit, and properly maintain documents for that, so that anyone asks the questions, I can say, see, this is the 4 wall where I have to operate. I have operated in that. Don't ask me anything beyond. And luckily for us, the standards are also equal. Just I told earlier, the standards are also equally elaborate. It covers everything. It does not leave any loopholes for us or leave any void areas. And if those void areas are there, we are safe. We can say it is not addressed. So that is the level of sincerity that we are required to follow in terms of standards on auditing. As far as this standard, significant decisions taken with respect to susceptibility of material misstatement in financials due to fraud, identified and assessed the risk of material misstatement due to fraud at the financial statement level and at assertion level, overall responses to the addressed risk mentioned above, audit procedure conclusions including those designed for management override controls, to document communication made about the fraud to the management and others. But this is what it says. You need to, effectively, if you read these 4-5 lines, 5 lines is nothing but the entire standard. Each level of standard, do this, do this, do this, do this, then do this, get this conclusion, do this. All that has to be properly documented with sufficient working papers. In fact, that advocate, he is saying, I don't know how your files are getting over in 8 or 10 box files. Theoretically, you should be having some 40-50 files for every audit. So much is the documentation that is needed. How is it you people are able to complete? Tomorrow if the disciplinary guys are going to ask me this question, how do you think I will be able to answer? You will forget disciplinary committee, even the institute at its higher level, the various committees that they sit, they are also speaking in that language. They say, no, how is it? I have given this guidance note that you are required to do this. Why you didn't do this? So that is the thought process there. So generally, all of us, all as mediums and small size practitioners, we do an audit by the pulse of the financial statement, by an experience. Those things are absolutely correct. But then the delivery has to be slightly more than that. Our execution has to be, spelled out in the form of documents and papers to say, I always do this. Now these things, if you want me to scatter and spill over across these standards, this complies this, this complies this, this complies this, ultimately this whole book, volume 1A and 1B of standards on auditing, standards on quality control and standards on review engagement, all these 3 things I have complied very clearly. That is what is our expectations. With this on essay 240, my session gets completed, and even more stronger guidance note awaits on the other side of T. Any questions on this, sir?
Sir, on the fraud, we are supposed to report to the central government. There are some sections.
Yeah, 143, yes.
Yeah. So how is it? Is it spelled out here also?
Yes. So it says, earlier slide we discussed, the last one here, determine if the information about the fraud has to be communicated to the party outside the entity. That is the 143.12 requirement. In the next slide I have put, fraud which involves or expected to involve individual and amount of more than 1 crore has to be spent. And for this, as I told, Institute has given a separate guidance note. How you are required to report, when you are required to report, what are all the steps to be followed, and for that purpose what is fraud, everything is given in that guidance note. But yes, there is a responsibility. For companies, for RBI, for banks, there are specific legal requirements. For others, say for partnership firms, for LLP, for that, or for insurance, everything is a company, so they all come under the Companies Act. For that, currently there is no legislation. It's so obvious, we cannot take up that assignment if there is a fraud. That is the fact. Yes, sir.
I have 2 or 3 remarks to make.
Yes, sir.
Queries also.
Yeah.
One is, of course, confirmation of balances. You know, in experience, you hardly ever get anything back. And so, how does anybody manage that where you don't have a confirmation of balance? And the second question is, I know I think it's been repeated very often, this particular point I'm going to make. I think it still is a valid point. Now we have a SEBI mandated completion of audit within 2 months. And effectively, closing of books, if you allow about 3 weeks time for that, and then 10 days of circulation of accounts for the directors. In fact, I joke to my clients, directors are getting more time than these auditors are getting. No, seriously. That's actually joking. And so 3 weeks takes away is gone for preparation of accounting statements, and then directors get about 10 days. In between, by the time your assistants, apprentices, look at the accounts, and by the time the partner gets his hands on the accounts, it's virtually not more than 48 hours.
Yes.
That's the second point.
Yes.
The third point is, I have been in practice for about 45 years. I started in 1974. Even today, I'm unable to tell whether management has deliberately or is deliberately delaying giving information, or if information is not forthcoming because of delays, is it genuine? Even today, I'm unable to tell those. So these are the three.
Agreed, sir. Agreed.
So how do you handle this?
Yes, sir. For all the three things, I will say I am on the same side as you. I will also accept the fact that within 3 weeks, in fact, we all know bank branch audit is even worse. April 3rd, we have to sign a financial branch audit. The branch says will be roughly 4,500 crores, 4,000 crores of advances. Yes, it is an immensely tough task.
No.
Sometimes we have sensitized them.
I'm sorry, it's not even tough. It's impossible.
Impossible, yeah.
So
Very next to impossible.
Have you tried telling the disciplinary committee? I mean, not that you have faced a disciplinary committee. And I have a fourth point actually. SA 700, it says very clearly, an auditor shall confirm that is applied all the standards on auditing. There's one particular paragraph in SA 700.
Yes.
If you go to SA 200, paragraph 20 says, unless an auditor has complied with all the standards of auditing required for the particular audit, he should not make the statement in the audit report.
Yes.
So how do you put these things together?
I'll address one by one, sir. As far as confirmation of balance is concerned, if we don't get, we should have the courage to say that I didn't get a confirmation on this. You tell me how else do I confirm? Of course, it is a management part. How else do I confirm? So then we need to go by on the number of balances that are confirmed, whether it takes care of the maximum materiality. Even beyond that, if it doesn't get confirmed, the standards are very clear. I can comfortably say that I didn't get a confirmation on this. So to this extent, I don't know it represents a true and fair view. Now, if you are going to ask me, does this happen? It's a bigger question, sir.
The notes we are giving this thing also, debtors and creditors balances are subject to confirmation, which is.
Yeah, you can draw an emphasis on that and put. So that is the power that is given to you in audit. What he is asking is, how do I proceed when this happens? When he is not going to give me confirmation. Yeah, so that's what. So, yeah, they need to give in notes, or I need to qualify my opinion and say that I didn't get a confirmation. So to that extent, I don't know if the debtor balance represented true and fair view. So you need to qualify a report if the intensity of the confirmation not received is so high.
I promise you, no balance sheet in this country can escape a qualification.
I won't, sir.
Qualification is required because in none of the audits you get a confirmation balance. In some of the clients, we ask them to start this process of confirmation as on 31st of January, because you have about two months of completion time for the audit. So normally it takes about 3 months to get the confirmations. So we start that process in 31st of Jan, subtract the balances as on 31st of January, so that they will be available for 31st March. But even then you do not get.
We don't get agreed. So see, in this case, I will only say the weapon that we have is ultimately in the audit report, sir. But how else do an audit? Sanjeev, what you are saying is only hypothetical, no one is qualifying the report. How else do I do an audit? Is maybe slightly push my audit and do multiple interims, get a confirmation at that point, start off the balance as on 31st December, like what I say. Maybe that will address some 15% of the issues. If I start in the last week of March and say for 31st March I want, maybe I will not get for even 1%. If I say for 31st December and wait till the April or May of next year, maybe 10 or 15% I will get. Then do the next work, see the high value sales transaction, see if it has got reversed subsequently. That may not give you an idea of whether transaction has actually happened unless I get a confirmation, but that is only slightly an additional advantage for you to know. If I receive the money from him, instead of it still being outstanding, say I'm doing an audit in say May month, by May if the money has come to me on that sale invoice, okay, I can be a bit comfortable. Then what I do, I judge whether the client has this thought process of just overbooking sales without doing it. For that purpose, I take the entire sales volume, I see how much percentage of it is regularly realized, what is the data turnover percentage, how much I have got confirmation. A summation of all this combination of evidences that I get, maybe can draw to an inference that, okay, but it doesn't happen. I also agree, I have very high volume companies, especially where there is an product oriented sale, is typically impossible. The only way I can do is I can do a 24-month audit and see whether earlier year receivables are since received. That is one way I can be happy that my financial statements for 31/3/17 are right in 31/3/2019. So within this wall, yes, that is what it is. And on the second thing which you wanted on,
Delays by the management.
yeah, delays by management. I don't know, that more often than not depends on the sensitivity of the area. It is intentional. More closer to the board meeting date, you receive it. Yes, especially when you're doing a bank and insurance audit, you receive LBNR certificate more close to the board meeting date. It means, boss, please don't read it.
No, I agree. I think it's more often it's intentional.
Yes. More often it is intentional. Sometimes they don't even anticipate that this is something we will be asking them. Even we give them the details required list n number of days before, they will have the feeling that you will get it. That will be their thought. Then we say, this is why I need this. They get to know, okay, sir, let me see. Let me see means you forget. Wait for next year audit. That is it. On the third thing of that essay 200 and 700, so that's what, sir. Only virtually impossible for me to do.
There are about 44 standards on auditing actually.
Yeah.
And most of them will be applicable in a normal audit.
Yes.
And so in the essay 200, paragraph 20, you are confirming, and in essay 700, I have complied with all the auditing standards.
Yes.
Which I think is a
Herculean task, and it is not happening. And the sorrowful fact is that that is what is being questioned. They say, you have confirmed this, you tell me the CVC or the CPI, when they ask questions, that is the precise question they are asking. How are you complied with these things? I am saying, these are all a part of my tradition. Yeah, I work in a firm which is now for so many years, 80, 90 years. It's a habit. This is a habit, hell with you, you tell me how you are complied. It is very valid thing. I mean, that's what the chorus shout here is. Either you make a point that we cannot do it, don't put so much on us, or says that this need not happen within 60 days. Don't put, either of it should happen. I remember some 5-6 years before when meetings were with RBI, the Central Statutory Auditor said that it is impossible. Earlier, I have seen balance sheets of banks getting signed on 20th April, 18th April and all. Gradually, it has now moved to first week of May or second week of May. It is yet to reach the place. Of course, this is also not comfortable, but I am saying that, crying is a wrong word, but that crippling that had happened on that RBI meeting ensured RBI give very strict strictures to the banks that don't do this. If auditors feel they don't have time, you please ensure that you delay your board meeting. So that, you know, sir, always there is a fight. Who gives the results first? Follow his results, do give similar results. Even though that is happening, but slightly in a deferred day. Instead of April 20th, it is happening from May 5th or 6th. So maybe things like this will put more things into perspective. You know, the second standard which we will deal there, we will even more understand that how much it is going to be difficult, or it is difficult for us to run our business as a profession. And as you said, it is going to become furthermore impossible with these people saying 15 days when you present the financials, so much competition around. All software companies, if they publish on 10th, if I have a software client, he will say, I will also want to do it on 12th at least. Else I will lose the pulse of market. Now software sector market is up by say 120 points. If I release my results in this, sir, I will also get the benefit of that 120 points. If you are saying I will release it only 45 days, I will lose this 120 points. You will give me? Sir, I would have got this market cap, sir. Will you give it to me? You know, it's a very tough part. Institute to some extent is doing its role. As professionals, we are required to do a more wider role in this. Let us try to put down our pen sometime and say, boss, I don't know. If you ask me, Sanjeev, I don't know whether I will do. But maybe that is the result. Maybe that is the way forward on this. Yes, sir. Then, sir.
Sir, how much is obtaining the MRL going to help us, protect us?
A lot if all your prior work are done. Once you have done all the earlier work that the standard says, and then your MR is going to spell out the fact that you have done all those things, and your summary documents, I mean all the other documentation also speaks in that language, MR definitely helps. And believe me, it has helped. It will help you. When you say that I did all these things, I had all these documents, plus they also give an MR, so which means you are out of the bracket now. You have done your role, and they all believe it. There is a standard which says MR alone is not sufficient, which means MR alone is not sufficient. Do all your work, arrive at a conclusion, then get an MR to save you from the fact that you are not hand in hand with them. You understand? MR says, yes, I have told you everything, and we are saying, yes, I have taken care of all those things. Assuming you don't get an MR, there are chances that, no, he is falsifying his document, I have told something additionally. You understand that is where an MR comes into picture, that is where it will help us. Yes, sir.
Whether any auditors reported so far, sir?
On what, sir?
SA 240.
So many, sir. So many, sir. Fraud is something, yeah. Regularly happens. Regularly they report. In audit reports, we will see. Yeah, 143 lot, sir. A lot of 143 reporting happens. Sorry? Yeah, more than 1 crore it happens. Less than 1 crore to the audit committee it happens. If you are asking me in terms of proportion, I will say, of course with the limited experience that I have only I am saying, I will say 60 or 70% of it is identified by the client, or in fact 90% is identified by the client. When the client identifies, you are not required to report. Yes. And when you identify to save your own certificate, you need to do that, sir. You need to do that, and they are doing. If you are asking Sanjeev, you are doing, yes, I am doing, but others that is a very bigger question for me to answer.
Even the published accounts also?
Yes. Published accounts, if I have read a CARO where very clearly says fraud is there, and I have seen notes to accounts where it says the auditor has identified due reporting under 14312 has been done, we have done this action, all those things I have observed.
Sir, there are cases where bankers appoint the stock auditors and forensic auditors conducted to the bankers, and those people give a report and they indicate some fraud or something. How do we approach that as statutory audit?
Yes, so when you come across it, forensic audit is a typical thing in a bank. When a forensic audit report says there is a fraud, then immediate thing for you to do is the standard already deals with, we also saw, this is something now the management knows there is a fraud. So why do the management appoints a stock auditor or forensic auditor? To give them an information whether there is a fraud. Once they know there is a fraud has happened, how the management has dealt with it is the first question. What did you do? You know there is a fraud now. So assuming a debtor, they go to the site, say forensic, they go to the site, he has got a project loan. They go to the site and they see only a barren land. But they have been receiving so many certificates saying 30% complete, 40% complete, this is there, that is there. But then the forensic auditor says that no, in substance it is not there. If he confirms that, then immediately what the bank has done for that? Sir, I have put NPA, sir. There are further procedures. Under RBI, there is a concept of FRMD1, Form 1, that they have to file with the RBI, say it is a fraud, red flag it, publish it in the RBI official site that this is a fraud account. So many procedures are there. All those procedures are done. In the next immediate board meeting, it is sensitized to the board. The board sensitizes that matter to the audit committee. They have filed sufficient cases, everything, you are happy. Then you don't have to do anything. Nanu by report pannamana, adala you don't have to do. Assuming the bank has done nothing about it, then your role comes. You sensitize the audit committee straight away. See what the audit committee does. Not happy, go to RBI. Not happy, resign. Yes, sir. So we'll break for tea, sir. Post tea, we'll see the second session, sir. Thank you. So welcome back all. I guess we can start with the next session of the day on next day. Earlier in the before session, we saw what are the requirements an auditor is required to do in terms of detection of risk of fraud in the misstatement. And of course, in larger picture, we saw what an auditor is required to do in terms of compliance with all the standards on auditing, what is the expectation from him. Of course, with the concerns that Mr. Kumar sir raised, it virtually puts us all out of place in terms of ensuring that we can actually in substance comply with this standards on auditing. Bottom line is we are out of business in Garuda. That's the bottom line of this. True. That is a very true fact. Though when you speak on subjects, it looks very nice. All of us know practically it's just impossible. If audit is not there, the next avenue generally that we will, all chartered accountants will look at is certification, assignments, the stock audit, wherever possible. If not for statutory audits, the next level, statutory means any attest function, statutory audit, tax audit, everything comes under the attest function bracket. Next, if we see certificates, net worth certificate, then the fund utilization certificate, then what was the certificate on tangible net worth, small certificates like 15 CB, any report on 80 JJ, section recently 80 JJ reports. These are things that the practitioners, and I will, of course, on behalf of all the small and mid-time practitioners, we will say, as good a part of revenue is statutory audit and tax audit, at least 20 to 25% of the revenue, we depend on these certificates for us to come. It is more of a working capital for all of us. These certificates, things like say every month the company makes foreign currency remittance, we wait for him to do the remittance so that he comes to us for 15 CB. That is the level of dependence as practitioners we have on these certificates. It's not wrong. I'm saying that is also part of the work. There is so much due diligence that we are required to exercise when we give a certificate saying no, tax is not to be deducted. Every time we get a chance to stare at the double taxation avoidance agreement, read section 195, read section 9, then come at a conclusion whether the tax is to be deducted or not. Of course, for this it can be done only by professionals. I don't deny that fact. Though the work looks very minuscule in terms of billing and in terms of period of completion. Like say for audit, you send a team of 3 or 4, you do the entire work for an interim audit, then a second interim, then a final audit. In a certificate it happens like this. They come, sir, Madhyana loan ponu, sir, give me network certificate. In the varshati, sir, last 3 years, sir, financial statement kude, this is the certificate based on the audited financial statements of so and so company limited. This is the net worth there. This certificate is issued at the request of management. So 100 times you will write certificate, 100 times you will write certify. We are ready to put seal, give how many ever copies they want. All of us agree to the fact that it is on an audited financial statement whose audit report says the responsibilities of management. I don't know anything about these accounts. I only give a reasonable assurance. It is only on the basis of some sampling checking. I only give a true and fair view opinion of this. It cannot be a confirmation that the figures are right. When the audited accounts were roughly 30, or we'll say 3 months into 3-member team plus partner, roughly 200 to 240 mandates are employed. Even after all that, the auditor gives only a reasonable assurance. When we certify that, we jump to say that the net worth is this. I certify the net worth. Based on this, the banker will give loan. I certify the fund has been utilized. Based on this, the bank will give loan. If you see the irony, if you go to the car, the auditor would have written, based on the information given to us and documents verified by us, we say that the short-term loans have not been used for long-term. We say that the term loans have been used for the purpose. They don't certify that. But when we give a certificate, we say yes, they wanted machinery, they purchased only machinery. So that is the level at which we are giving certificates where the underlying document or underlying the base reports, in some cases we go through transaction, some cases we solely rely on the certificate, on the audited financial statements. Based on that, the certificate we give, we have the courage to say that it is absolutely perfect. We all would have learned, no? So what is the difference between a certification and an audit? Certification, the level of accuracy is very high as compared to an audit where you are required to give only a reasonable assurance. This is all what we read in theory. But in practice, when we see, all of us will definitely agree to the fact that we invariably certify everything in the financial statement which is actually not certified, which is only audited. That is the current practice. That's what we have been doing. And as a part of my bank audit, I have seen so many certificates from our own fellow chartered accountants which are nowhere even near to the actual financial statement. Adayum Tandi. What I am saying is stage 1 giving certificate based on an audited financial statement. Next one giving a certificate which is nowhere even near to the audited financial statements. We do come across, and let us take it with a pinch of salt, that this is all wrong. It's a fact that what we are doing is immensely wrong. Sir, first you made audit impossible for us. No, we are not going to get audit. If you are saying should not do audit. Now certificate that is the true thing. And this guidance note that the institute has published in 2016, which is a revision of an earlier guidance note, the spirit of this guidance note is very nice. The spirit, what it says is what we just discussed. It says, when the base document based on which you are certifying or issuing a report, when that itself has so much inherent limitations in terms of accuracy, when that itself cannot be undisputedly told to be correct, dear practitioners, you please don't give a confirmation certificate or a confirmation report that it is absolutely correct. That is the spirit of this guidance note. Do we comply with this? Even when this guidance, when I was asked to speak on this guidance note, people from the AISB spoke to me. I asked them the same question. Sir, I have gone through this guidance note. It looks impractical for us. You have told this, sir, in your own experience. Have you seen someone complying with this guidance note? They told, no, Sanjeev, I don't see anyone complying. That is why I want this session to be handled, just to sensitize them that there is something like this. Sir, do you want them to comply? Aduko, I am not getting clear. They are saying, Sensitized is there is something like this, so that based on the intensity of certificates or the kind of certificates they are giving, let the practitioners decide whether the institute should help them or not. Now if I go by this guidance note, as I told you, I am saved. The institute will save me saying, no, he is a practitioner, he has followed the guidance note, you cannot question him further. But if I don't follow this and I go on to issue a certificate which is ultra virus this guidance note, when I get caught, I am and which also know, when we are certifying, we all tell the client, sir, I am certifying, which means it has to be accurate. Like say for example, for pollution control board, a standard certificate we give is WDV of fixed assets. We say, sir, I give the WDV, but I myself know that in this plant and machinery there are a lot of furniture and fixtures. Last year when I did, I myself said the amount was small, but I said don't pass certification entries. Now, நீங்களே end நிக்கிறீங்க for pollution control board, this one it is not right. When we certify, we get the consciousness that the accounts was wrong. This is only a small scenario. Just think how much more errors could have been there. Small errors, maybe immediate. How much more could have been there? Putting the audit is not at risk, because audit ultimately is only reasonable assurance. But that fixed asset I am certifying now to be absolutely correct, based on which the PCB is levying a charge. The yearly renewal depends on the gross WDV of the fixed assets that you are going to certify. If assuming there is a misclassification in this, something is classified as building instead of plant, the government is going to get a lesser fees. Tomorrow they are going to pounce into the company and say there is a misclassification. What they will say, auditor certificate kuttare, avarabe pudi. That's what the AASB people spoke to me. They said, we are getting notices like this. We are getting notices from the income tax department. We are getting notices from the RBI where they say, sir, see what your chart accounts are doing. They are giving so much false statement. Please take care. And they said, ASB very rightly said, when we go into the roots of this, we observe that it is not a fact that our people have not done the work. It is just that they are overcommitting. They are overcommitting to the fact that I certify. It is absolutely correct. They are saying, I don't want our members to do this. Just as they do audit with sufficient care and give ultimately only a reasonable assurance or a limited assurance, meaning a negative assurance. When they give only that to a financial statement, let the same thing be given to a certificate or report. This is the thought process that the institute wants to drive among us, and it is in that spirit that this guidance note is being issued. The very guidance note is fairly elaborate. To sum up, this guidance note says, in substance, carry an audit when you do a certification work. He says, you have your materiality level, do a proper planning, discuss with the management whether they have actually understood why at all that certificate is needed. Say for 15 CB, invariably the understanding amongst our clients is 15 CB is a tax pudichirka illaya, adu certificate dane. Adu mattum illa. 15 CB is a certificate that goes slightly beyond. We all know the companies are required to give the details to through the AD category banks. They are required to file to the RBI the amount of foreign exchange outflows that are happening. All these things are also there. So when you go into that spirit is when we identify that this is applicable only for foreign currency transaction, though a rupee transaction can happen in 195. So the standard says you go have a discussion with the management, ask them whether they have understood why this certificate is needed. Do they know what and what to match? Like in what is just in the PC pollution control board certificate, do they really understand what and what to match? PC pollution control board certificate says premises on lease should also be included. What does that mean? Should they include the only areas where there is an operational lease, or the buildings that are also on finance lease? Should they also be included? Why PCB says they want the value of this also? Things like this. This guidance note says, you please discuss these things with the client, get his understanding, then you devise your methodology of verification, see what and what you are required to compare. Then despite doing all this, please don't go ahead and certify. Please give a report of reasonable assurance or a limited assurance as the case may be. Please don't do anything. This is what this guidance note in substance is. I am not going to deal this para by para. We will just see a glimpse of certain highlights of this guidance note. When we discuss with AASB, or when I discuss with AASB saying, sir, what you are saying is virtually impossible, sir. 15 CB is a standard form where I have to write name of the person, name of the remitter, name and address of the receiver, the bank through which this goes, BSR code, amount, what is the tax rate, if no tax, why no tax, whether DTA relief is claimed. So it's a very standard format. In fact, I even forgot what is the left hand side, sir. It is all online now. I have to go and fill that. You have written in your guidance note, you do this, go and discuss with the management, give only reassurable assurance. Where do I do all this, sir? Then the next immediate question I asked him is, oh sir, have I misunderstood? Is this not applicable for these things? Is this guidance note for something else? They said, no, Sanjeev, your question is absolutely correct. This guidance note is for everything else other than the audit report, other than the 3CA, 3CD, other than the, of course, bank audit. Other than these three, for which we have a separate guidance note, any other signature that you put from morning to evening in your office is all covered by this. Any other certificate, meaning Form 3CEB, 80JJA, 15CB, network certificate, turnover certificate, then your APR, then Form ODI for overseas investment. If I start telling the number of certificates, that will run to 365. Every day one certificate pollen. That is the number of certificates that the legislations want from chartered accountants. And the institute says, yes Sanjeev, these are the certificates that I am covering under this guidance note. I want the chartered accountants to comply with this guidance note for all the certificates they give. I said, sir, okay, but you are saying report reasonable assurance, adhikala scope illena. They said, I know. This was the revision that we did to this guidance note. Earlier this guidance note did not address that. Now we are addressing that also. What the guidance note now says? It says something like this. It says, generally when you are asked to carry out an assignment of issuing a special purpose report or a certificate. So special purpose report means operation of the, like say you have a branch office for which you are an auditor or not an auditor. The ultimate parent or the head office of that branch is in foreign. They say, you please conduct a review of the operations and give me a certificate. They will use certificate only. The standard says, when you are issuing the report, you say, there is a content I am giving, you give this format. Assuming it is required under law to give a certificate, even then. Say for example, we will take classic case of 15 GB is a regular certificate, we all know. The guidance note says, don't go ahead and issue that 15 GB. We have given you one report format, no? You please issue a report like that. I said, sir, it will get rejected. They said, I want it to be get rejected. You please file that report, let it get rejected. Then you proceed with issuing the report with the legislation wants. So that tomorrow if something comes, I can comfortably say that, no, I followed this guidance note, I issue this only. Since it got rejected, I am following the legislative given format. And the standard further says, and the guidance note further says, you reproduce this fact in the engagement letter and the representation letter that you had issued a report in accordance with this guidance note, which has got rejected, and hence you are issuing the report that is required under the legislation. Meaning, tomorrow if someone is going to find fault on you for the certificate, you can say, this was not the original certificate. My original certificate is this, where I have clearly mentioned the inherent limitations, where I have clearly mentioned that I am giving only a reasonable assurance or limited assurance, that you rejected. Had you not rejected, you would have known that there is already some risk in this. You would have known that I am not giving absolute certificate. I am only giving a reasonable assurance. Since you rejected, you cannot blame me. I want the legislators to understand this. And they said, on regular day-to-day operation, this is not going to happen. They said, we agree. We also agree it is not going to happen. But we internally think that this is the order of the day. When this NAFRA and so many other board comes, they are going to question each and everything that comes from a chartered accountant. Or having taught prudence to our customers, we should also be very prudential. We should expect the worst. When these things come, how are our professionals going to save themselves is the thought process that the council has, and this is only an output of that thought process. So, as a part of your session, you please make it very clear that let us at least start trying what is given in this guidance note. Ultimately, if it gets achieved, very happy. If it doesn't get achieved, at least our professionals are not in soup. This is the thought process of the institute. When I went through the guidance note also, I also had a similar opinion that, okay, this is what it says, because it doesn't say don't do your business. It says do something the guidance note says, then carry on with your business. So that is what this guidance note is all about. There are two paragraphs, para 32 and 32A, where they discuss the modus operandi in terms of issuance of report or a certificate, where they say whenever there is a legislation specified certificate or a report, and if that report is almost equal to the report discussed in this guidance note, then no problem. Please go ahead and issue that, and you comfortably mention that you have done the work as given in this guidance note. But just in case the legislator prescribed format is different than what is the format prescribed here, then don't issue that. First issue a report like this, let it get rejected, then you proceed with issuing whatever you are giving. Along with that, you attach the rejected report to ensure that you are safe. Is the driving point behind this whole guidance note. The preamble of the guidance note is how do you in substance first do that work, which is also very important. All of us know, just like we just spoke now, in bank audits, when we see the certificate, first question, auditor accounts kuda paakaliya. We'll ask, no, auditor accounts, there is a stock of only 30 lakhs. How has he confirmed for 4.5 crores? We tend to scold our own co-professional and say, does this happen or not? All of us accept that it happens. And that this guidance note says, though the reporting is on one part, he also says how you are actually required to carry out this work, how diligent you are required to be. On a very lighter note, this is a summary of the entire standards and auditing book. This virtually deals with everything that the standards and auditing says. It has one paragraph relating to identifying the risk in giving the certificate. Then a discussion that you are required to have with the management to know what is the risk if I give the certificate, what the risk they perceive. Then based on all this assessment, they are asking you to plan the verification work. Planning the audit, plan the verification work, design what all you are going to verify, what are all the documents you are going to ask from them. Based on that, you carry out your verification. If a materiality is needed, please draw materiality level, there is no harm. If materiality is not needed, and if there is 100% certificate you need to carry out, please carry on and 100% certification work, verify every figure and confirm that it is all absolutely correct. Then he says issue the report. And the issue the report, like he is having a structure, he says the report should look like this. Just like we say it is the responsibility of management in the audit report, there are similar paragraphs in this. Just like we say I only give a reasonable assurance in the main audit report, here also he says, for example, we will take this PCB certificate. The report the institute says that we should be giving is based on the information explanation given to us and the document that I have verified being the fixed asset register of the company, the audited financial statement and the invoices and supporting wherever necessary. I give a reasonable assurance that this could be the total amount of plant and machinery that the company has is what the standard asked me to give. This kurta PC vena panuva sir pong sir abindruva. That the institute also says that this is what we want, Sanjeev. Let it get rejected for some time so that government authorities, they know the severity of what we are talking here in terms of our risk. Currently they are very casual. Audit பண்ணிட்டீங்க சார் சர்டிஃபிகேட் கொடுக்கிறதுக்கு என்ன அப்படிங்கிறாங்க. It is actually other way around. Audit கூட பண்ணிடலாம் சர்டிஃபிகேட் கொடுக்க முடியாது. We have seen, no, practically we will give a SID refund certificate. In the SID refund certificate, we will write this SID refund receivable is a part of the loans and advances. If we take last year loans and advances, it will not even be half of this figure. And then he will write from there, as per the audited financial statement is only this much. But I observe you have issued a certificate of this. How? Again he will ask a question. Then we will have to give an explanation saying no, short term, long term, some part of it I have put in long term, some part of it I have put in short. Even after all this, what he will say? Since the certificate is wrong, no refund. Then the client will be behind us. Yes sir, audit fees certificate fees ultimately I don't get a refund. You understand the severity with which our certificates are getting viewed, and all of us by now would have got, so people who are issuing so many 15 CBs would have got notices through the clients on list of all 15 CAs, all 15 CBs, the reasons for non-deduction, what is the basis for arriving at the reason. Already I am mentioning that I am saying as per article so and so of the DTAA, since it is a business profit and he does not have a place of establishment, it is not taxed. I am giving the reason. He is saying, how did you arrive at this conclusion? You give me a document. So when that assessment happens, my 2-page certificate effectively becomes a 60-page document. I need to give the DTAA, I need to give a TRC, I need to give the base agreement. So many documents come there. And that's what the institute is saying. Sanjeev, you are saying, no, There are so many complexities, the resultant of a certificate. That's why I need to cut the bud at its nip and start itself say that I am only giving a reasonable assurance that tax need not be deducted, because as far as I am given to understand, he does not have a PE. As far as I am given to understand, this is not a technical service. Things like this, which will form part of your report. By reading this, what will the income tax department do? It will definitely issue notice. Auditor doubt அப்புறம் நீ எப்படிப்பா கன்ஃபார்மாக சொல்ற? So he is anyways going to issue a notice, but at least you will be saved. They will not write to the institute and say that your people are not doing the work properly. They don't know what is technical, they don't know what is business profit. They don't even know the fact that there is no DTAA with Hong Kong. And the money, they don't want this embarrassment. I won't say embarrassment, which is also wrong on the professionals' part. They don't want that to happen, and hence this guidance note. So this guidance note, though as I told, in depth is just an audit of certificates. The main core part of this guidance note is in the format of reports, is in the para 32, 32A, and they have given sufficient illustrative formats of how do I issue a report for say network, how do I issue a report for utilization of fund. They have given some draft reports and done. Let us try. Let us try from now to issue 1 or 2 reports like that and see how it is taken. I asked this to them. They said, we have also not tried. You please, through your professionals, let us start trying and see where we hit the road in this. So with that, in fact, actually I have completed the guidance. So let's just quickly run through this presentation and see what is what. The scope of this guidance note, it specifically caters to the reports or certificates in support of statements or other information provided by an entity, such as report or certificates to fulfill a contractual reporting obligation required by those charged with governance of an entity, required by laws and regulations. Typically, like bank says, for the purpose of this loan, you are required to get an end utilization certificate, CA certified. Then the law says 15 CP, CA certified. Then the audit committee chairman says, how do I know that this year all transactions are entered, CA certificate. So many CA certificates, for everything there's a CA certificate. Now, on one side we do feel happy that it increases our bank balance, but on the other side there is an equal amount of risk that the guidance note advocates. Certificates and reports generally issued, very few, I have spelled out only very few, which immediately struck my mind. 15CB, Form 29B, Form 10DA, Form 3CB, Fixed Asset Certificate for PCB, Turnover, Net Worth, Net Profit, Working Capital Certificate, Report on the manner of utilization of funds under SEBI, Annual Performance Report of subsidiaries for the purpose of RBI, where you have a JV or an associate or a subsidiary, Annual Activity Certificate for branch or license office, SCIS scheme under the foreign trade policy, GR waiver. This is from GR waiver certificate where you issue saying that this is a transaction that does not involve foreign currency transaction. A good will be exported from here, but there won't be any foreign currency receipt because it will be a sample sale or it will be a repair and reason, for which the customs authority and the banks, they want a certificate from the chartered accountant that yes, there won't be any foreign currency transaction in this. Satyama namakku theriyadu. We only go by the documents that the banks give, the company give, and we ultimately say yes, it does not involve. We actually don't know whether the sample sale subsequently became an actual sale and they got the money. That also, we are made to close our eyes on that also, but that's what this guidance note is all about. Then realization certificate as in, you all will be knowing, as in under the GST law also, there is a time limit of maximum of 365 days to receive any foreign currency. When you are under letter of undertaking, when you want to get refund, the departments ask a certificate that every fund is realized, all the exports are realized, and you are required to give a certificate, which is something we won't be doing in an audit also. Audit also we will say, we will give a reasonable assurance that the data reflect a true and fair balance, but I don't know about its actual realizability. So this guidance note in substance says that ultimately whatever certificates or reports you are giving, I want you to give only a reasonable assurance, or rather, I want you to give only a limited assurance in most of the cases. Worst case, maximum you can give a reasonable assurance. Don't give any certificate. We didn't teach you to give certificate. Right from your CA days, what we are teaching you is only reasonable assurance. So please don't give certificate, it was says. So what is the difference between a limited assurance and a reasonable assurance is, limited assurance is less harmful for us. Reasonable assurance is slightly more harmful for us as compared to limited assurance. Of course, it is the opposite to the other side. To the people who are viewing our certificate, limited assurance na they will not be that happy. Reasonable assurance, they are expected to be slightly happier. In substance, difference between limited assurance and reasonable assurance is, in limited assurance, I don't do an audit of the mechanism or the internal control that the company has before arriving at the fact that this is the fixed assets, arriving at the fact that this is the net worth. I am not required to do an evaluation of this internal control when I am giving a limited assurance. Of course, hence my report also will be worded as a negative assurance. Negative assurance, we all know, SRE 2410, there is a verdict. Nothing has come to our view that causes me to believe that these things are not in accordance with this. We don't say that it is. We will say, I don't know whether it is not in accordance. I have not come across anything. When we give a negative assurance, that is a limited assurance. Guidance note says, please give only a limited assurance. Just in case you are forced to give a limited reasonable assurance, in that case, you give a reasonable assurance. But when you give a reasonable assurance, please have a thorough examination of the internal control procedure, that the company has in saying this is what the figure is. You please evaluate the effectiveness, not the efficiency, of course. Do the effective evaluation of the effectiveness of that internal control, and then give a reasonable assurance certificate. In substance, if I slightly imagine, I will say for certificates or the reports that you are forced to give based on the audited financial statements, you can comfortably give a reasonable assurance, because the audited financial statements is already a reasonably assured financial statement where the internal control systems have been sufficiently reviewed. Based on that, now that you are giving a report, you can also give a reasonable assurance. But it is not based on an audited financial statement, and we are required to have a new review of a set of documents. Don't give a reasonable assurance, give only a limited assurance, because we don't know or we are not given the preview or study of the entire set of internal controls that exist in the transaction. So there you need to give a limited assurance. Engagement risk, reasonable and limited assurance. Reasonable assurance engagement. The practitioner reduces the engagement risk to an acceptable low level in the circumstances of the engagement as the basis of the practitioner's opinion. The practitioner's opinion is expressed in the form that conveys the practitioner's opinion on the outcome of the measurement or evaluation of the underlying subject matter against the criteria. In addition to any other procedures on the subject matter information that are appropriate in the engagement circumstances, the practitioner procedures would include obtaining sufficient appropriate evidence of the operating effectiveness of relevant internal control as an internal control. Limited assurance engagement. The practitioner reduces the risk to an acceptable low level in the circumstances where risk is greater than that of a reasonable assurance engagement as the basis for expressing a conclusion. The nature, timing and extent of procedure performed in a limited review assurance engagement is limited compared to that necessary for a reasonable assurance engagement, but is planned to obtain the level of assurance that is in practitioner's judgment meaningful. Then there are of course, just like I said, since I told it is an audit, there are of course inherent limitations. Practitioner is not expected to reduce engagement risk to zero, as there are inherent limitations attached to the procedures which a practitioner may perform in relation to issuance of a report. The inherent limitations may include the nature of financial reporting, the use of selective testing, inherent limitations of internal control, the fact that much of the evidence available in the practitioner is persuasive rather than conclusive. The nature of procedures to be performed in a specific situation, the use of professional judgment in gathering and evaluating evidence and forming conclusion based on that evidence. In some cases, the characteristics of the underlying subject matter when evaluated or measured against the criteria. The last is the most interesting. Need for engagement to be concluded within a reasonable time and at reasonable cost. Reasonable good, very minimum cost. For the 2,500 rupees you get for a 15 CB certificate, imagine if we have to do this, where do we end? Which do we increase? Do we increase the level of work we do or the fees? Unanswerable question, but that is what the standard says, the guidance note says. So this is what the format of report that is perceived by the institute that we should be issuing when we carry out a special purpose assignment or a certificate. It says it needs to have a title or an address, identification of the description of the level of assurance obtained by the practitioner, the subject matter information and when appropriate the underlying subject matter, identification of the applicable criteria, description of any significant inherent limitation associated with measurement or evaluation of the underlying subject matter against the applicable criteria, where appropriate restriction on usage, that to whomsoever it may concern, that certificate should never be issued is what that means. Statement to identify responsible party and description of their responsibilities and the practitioner's responsibility. Informative summary of the work performed, practitioner's opinion or conclusion, etc. The same thing that is there in SA 540 and all. Format of your report, SRE 2410, everywhere we will see a similar format. This is a similar format that you are required to issue for the reports or certification assignments that you take up. Also statement on meeting the requirements of this guidance note. So wherever you are issuing a report which is in line with the requirements of guidance note, comfortably place reliance that you have done this work in accordance with this guidance note only, meaning you have only done a test check, you have done placing materiality as a premise, you have done based on the assertion of risk by the management, everything by the management. You have done based on everything that they do, you are issuing the report. When you have done that, he says, you can comfortably place reliance on this guidance note. Statement of compliance with the requirements of SQC1. Of course, so the standard somewhere, when you read the bar guidance note, you will observe that it says, even when you perform a certification, you are required to maintain utmost ethics, utmost quality as required under SQC1. There should be independence when you are issuing the certificate. All this independence as in being an internal auditor, don't issue a certificate on the net worth of the company. Being an internal auditor, don't issue a certificate on tax deduction. Things like that. Wherever there is an independence, there is a conflict of interest that is involved between your other functions and this certificate, where you are viewed as an attest function in the certificate by the authorities, you please don't issue. Please take care of the concept of independence when you are issuing a certificate. Then materiality. The guidance note thoroughly addresses the materiality consideration which a practitioner can apply by performing the assurance engagement. Materiality is considered in the context of qualitative factors and when applicable, quantitative factors. The practitioner has to apply his or her professional judgment when determining the relative importance of such factors and considering materiality. Subsequent events. Just like an audit, you are also as a part of certificates required to verify subsequent events. Impossible. Subsequent என்ன நடந்தது ஃபார் சர்டிஃபிகேட், அவனே ஒரு தடவை தான் சார் என் பில்டிங் வந்தான், உள்ளே வந்து யூஎஸ் போகணும், அதனால என்னோட நெட்ஒர்க் வேணும்னு நான் சர்டிஃபிகேட் கொடுத்தேன். சப்சிக்வெண்ட்டாக அவனை எங்கே போய் பார்த்து அதான் அவன் ஆக்சுவல் நெட்ஒர்க்கா? when he comes for a rental certificate for the purpose of US visa interview, he says, sir, my bank balance is this much, sir, this is my house, this is where my property is, எல்லாம் கொடுத்துட்றான். That day we get a confirmation. How do I know that there is actually the bank balance? வேறு யாரோ போட்டுட்டு அடுத்த 3 நாள் கழிச்சு அவனுக்கு திருப்பி கொடுத்துருந்தானா? How do I even know that? He says, please take care of the subsequent events also. If you have not taken care, please mention that fact that you have not taken care of subsequent events. Engagement letter and written representations. Same as that in an audit. Get an engagement letter saying, நீ இதெல்லாம் பண்ணுவ, நான் இதெல்லாம் பண்ணுவேன். Clearly mention the fact that in this case there is a legislation required format of report. I will be issuing a report in accordance with this guidance note. You please submit that to the department. If it is accepted, I am very happy. If it is rejected, you are very happy. But please do that work. If it is rejected, give that to me, the fact that it is getting rejected. Then I will issue the report as per the regulatory format. Don't force me to, adala mudiyadhu sir, ipdi dhaan sir, apdiye podu sir. I won't do that. Please spell out that clearly in the engagement letter and say that this is what I am going to do. Then get a confirmation. If it doesn't accept, I don't know with what guts the guidance note says, you should come out of the assignment, it seems. You should not take up the work if he is not in line with that. Then he says, get a written representation from the management that all எல்லாம் அவன் சொன்னது தான், இதெல்லாம் தான், he has disclosed every fact to me and as required in this guidance note, he has accepted the fact that I only give a reasonable assurance. He knows that I only give a limited assurance. He knows that I don't certify the figures. And a very representation. All these kind of structures are there in the guidance note. Then obtaining the assurance opinion or conclusion. Just like in audit, here also you can definitely issue a modified opinion. Audit clear, we don't issue modified. The certificate here is it says that you can issue. So wherever possible, if we come across some such really good assignments or certification where the client appreciates the fact that we need to follow this, let us do a proper work and give the certificate. Then documentation. The practitioner should prepare on a timely basis engagement documentation that provides a record of the basis of assurance report that is sufficient and appropriate to enable an experienced practitioner having no previous connection with the engagement to understand the nature, timing, the nature, timing and extent of the procedure performed to comply with the guidance note and the applicable legal and regulatory requirements, the results of the procedures performed and the evidence obtained, and significant matters arising during the engagement, the conclusions reached thereon, and significant professional judgments made in reaching those conclusions. These are things you are required to get documented for issuing a certificate or report. Any questions on this, except for can we complain? That is, all of us currently know. Any other questions on this? Any technical questions on this?
Moving forward, the certification is going to be centrally.
That UIDAN, sir, UDIN you are saying, yeah, so that is an effort to consolidate the set of certificates that are issued, give an authentication to that. Sir also would have observed in bank audits that we get to see a certificate from a chartered account which doesn't even have the membership number or the firm registration number. So just to curb those practices, the institute has come out with this thing of unique identification number for certificates, where we are required to apply, get the serial number, affix that, then upload it back to the portal, so that the third party who is using the certificate can actually go there and see whether Sanjeev signed it or it was not Sanjeev who signed it. So this is one directly which is, as for practitioners, it is very helpful. We need to start doing that. It's a very slow. Mandatory, yeah, it is mandatory. No slack, I guess January is the cutoff that they are giving for. Currently, already the portal is open. You can still start using the features. From 1st January, we cannot issue a certificate which is without this unique document identification. One happy thing is we will not get call from bank. Sir, Ningla Sanjeeva, you only signed this balance sheet up. We won't get that call henceforth at least. Because since our UDIN will be there in that, they know that okay, this is the person who has signed this report. And the funnier thing is, the bank will send us a mail saying, please confirm if you have prepared the financial statements and have audited. That is the confirmation they want from us. I am saying big banks, India's leading bank, they send a confirmation like that. We will say, no, I didn't prepare. You please read my report. I only audited the account. Henceforth, post this UDIN scenario, hopefully we don't get those threatening mails, that keeps our COP at stake. Anything else, sir?
I have some network, because I had this problem recently. We issue a certificate on network for a lot of purposes which are not corporate.
Yes.
In other words, for government departments and so on and so forth. If you look at the definition of network as per the Companies Act, it takes away a lot of these things. For instance, even
CRR.
depreciation prepared on a return on value subsequently modified to stated method and then returned back, it does not qualify for network.
Yes.
And in fact, it says very clearly in the first itself, any profits created out of profit loss account.
Yes, should only form part of network.
Yeah.
Yes.
So which means I had a case where there was a demerger, and then in the resultant company, the profits came from the original company. Which means it was not created actually out of the profit loss account.
Yes. It is only capital reserve.
Yeah.
What came in was a capital reserve on demerger.
No, it's actually revenue reserve for the purpose
Okay.
But it does not qualify for the definition of a network. Is it what is meant to be intended to be?
Yes, sir. So I am giving a practical solution on this, sir. What I have observed is whenever we give a network certificate, in that regime, if I am going for a bidding, if they have already defined a network, we will take that definition. If whenever no definition is provided, we faithfully go to the parent act of Companies Act, we take that network and we ensure that we say that for the purpose of this, net worth is this, which is as per this act. If assuming the regime under which I am issuing a certificate already has a net worth definition, I ensure that in my certificate I say this net worth is this plus this, which is as per the definition given by this person in this place. So when we issue a certificate, we ensure that it is not on us to define what is net worth. We say we take either this or this. Either of this which is correct, I am not confirming here. We all know that net worth is a very daisy environment. There is one net worth, there is a concept of tangible net worth. We don't know for what purpose he is asking it. Even in banks, every quarter we send 2 net worth certificates, one net worth, one tangible net worth. So we ensure that in the certificate we spell out what that net worth means. We don't leave it to choice. We say this net worth is this plus this, which is as per the definition given by them in this circular number or in this instruction, or in some cases the tender document, clause so and so of the tender document, we mention it straight away in the certificate, so that to some extent we are safe.
So it always as per the Companies Act.
When nothing is given, I will take example of tender document. If nothing is given in the tender document as to definition of a net worth, I will go to the Home document. Home Act, Companies Act. Assuming company is the assessee, client.
In this particular company where I issued the certificate, the figure as per the balance sheet, reserves and surplus is about 360 crores. When I went through the definition of Companies Act net worth, it came down to something like 45 crores. So I mean, you talk about difference of about
I know, I got it, sir.
360 crores to 45 crores. So imagine what the client
Yeah.
because it's something he never expected.
Yeah. He would have baited on that net worth of 350 crores to do whatever.
And especially talk about tendering and things like that. It makes a huge difference.
Yes, sir. So, I'm only giving a via media solution. Maybe mention that as per Companies Act it is this, but as per balance sheet this is also part of that. But I cannot say it is net worth. I just need to mention the fact that's all. Very, very grey area, sir. The two, this net worth, solvency, all these are very grey areas. Any ratios for that matter, anything that has numerator and denominator, it is on the balance sheet. A number of, some will say goodwill should be included. They will say there is an amalgamated goodwill, not internally generated goodwill. He will say AS 26 wants every goodwill to be written off. I know. Some will say deferred tax assets should not be included. He will say no, this is deferred tax asset on account of fixed assets, non-account of losses. Only if losses virtual certainty is over. They will say every deferred tax is intangible. அப்புறம் அவங்களுக்கு ஏஎஸ் 22 சொல்லி கொடுக்கறதுக்கு நம்ம ஐஸ் போயிடும்.
But we can disclose that whatever material impact of interpretation, whatever you have.
Yeah, we need to, sir. We need to. Is it going by this guidance note? If we are trying to comply, he actually says that. He says what are all the legislations you took bait when you are issuing the certificate. As per that, what it is, what documents you received. Ellame he is asking us to mention this.
But which overrides? Suppose, as I said, for bidding, they are asking a specific format.
Yes.
Companies Act says something different.
Yes. Sir, if bidding document there is a definition, you can comfortably go by that, but mention the fact. Yeah. For the purpose of this certificate, net worth means this plus this, which is as per so and so of the tender document, para so and so, whatever. Para so and so of tender document. Mention that. Yes, sir.
Pollution control board and all. For land value would have been the only notification.
Yes.
They are asking for the revaluation and all.
Cost or WD?
We only very but really I'm saying பேசாம இதெல்லாம் செய்ய கூடாதுன்னு சொல்லிடலாம்.
Yes, right. They are not
No, the PCB again,
revaluation.
there is a cost or WDV. Still that interpretation.
Yeah, so many people say when we say cost, he will say WDV. When we say WDV, he will say cost.
Pollution control board is specifically, they are talking about only cost. not
Cost,
WDV.
yes, because he needs fees for the higher amount.
Exactly.
He will say that WDV is only 5,000 rupees. Cost is 10 crore.
That's
Sir,
what
this
they are-
was bought 60 years before. Sir, இப்போ திரும்ப கூட மீதில financial statement ல இருக்கல கட்டுமா. Very difficult. Especially on land value, we'll give one value. Then we'll say guidance value, guideline value. They will say sir guideline value la vithu pove illa. Then go to valuation professional. Very difficult.
Actually, till now, from PCB there is no complaint.
You're asking me whether it's coming or not, sir? Definitely it is coming, sir. எல்லாமே சார் கிளைண்ட் சைட்லையுமே they will want a lesser fees to be paid. அதனால அவங்களே எவ்வளோ முடியுமோ வேலையை காட்டுவாங்க. Yes, sir. Of the company. Theoretically, I will say it should not be taken, sir. There is a conflict of independence straight away. So, I can draw inference from Companies Act where he says what are all management functions which an auditor should not do. So, if you are giving an attest, which means you are an auditor. When you are doing an attestation, there are things that you should not do, which includes an internal audit function. Then next question is what kind of certificate? If it is somewhere where your certificate is considered to be true and correct for some evaluation, then definitely it should not be from the management auditor. It should be from an external person only.
If an internal audit is not allowed to do tax audit, why is the statute not allowed to do that? It's been bothering me. I mean, it's been.
I know both are attest functions only, no sir. In both cases, what I do, even in tax audit, what is it? I say there are 299 sections in the Income Tax Act. I say this company has complied with every section of the Income Tax Act, and how they have complied is what I am reporting in 3CT. Both are in substance only attest functions, sir. So I don't see any conflict in that.
Internal audit will be much known about the facts.
Yeah. So internal audit doesn't become a third eye, no. Internal audit is the person who has during the course of verification told இல்ல இதுக்கு நீங்க புடிச்சிருக்கணும் புடிக்கல இப்ப புடிச்சி கட்டிடுங்க. He has already done that, which means he is not having an independence from the management to say that it has not happened or it has happened. He would have been the person who would have given an idea itself saying எதுக்கு சார் இன்கம்ல expense ல போட்டீங்க இன்கம்ல நெட் பண்றீங்க TDS வராது. Get it? So on paper understanding is that it is an attached function. It has to be done by a second person.
So originally it was allowed, then last
I know, sir. In fact, VAT audits, internal auditors are still doing. GST audit, no, the institute has come out with a specific guidance saying it should not be done.
Form WW.
Any audit should not be done by an internal auditor.
As a matter of fact, in my opinion, statutory auditors, I mean, there is more of a reason for statutory auditors not doing tax audit because accounting is always tax oriented. But especially in a country like India,
Yes,
tax,
definitely.
accounting, statutory accounting, I mean, accounting for Companies Act or books or whatever we call, is more tax oriented because there's always a bias of tax on the accounting.
Yes.
And a statutory auditor who audits the statutory accounts, audit accounts, with the tax bias, if he is permitted to do a tax audit, I mean, I think it's a very, very incorrect to say that an internal auditor should not do a tax audit.
Why internal auditor should not do is a separate question. On why statutory auditor can do, I will say when he is doing a statutory audit, just like you said, the statutory auditor has the tax based bias on that. He already takes care of the fact that it is within the tax laws, no? So he is only doing an extension in the tax audit by filling an even bigger form and saying everything is complete. Why internal auditor should not do, it is perceived as a management function. Internal audit is a management function, tax audit is an attached function, which should not be done by the same person. That is their person. But maybe on a different thing you can say, statutory audit should happen only once in a year. When you do another audit of the same accounts under some other regime, you might tend to lose the skepticism. Because when you are looking something at the first time, you will raise multiple questions. Tax audit, getting so used to the account, so used to the client, so used to the client environment, we might lose independence if I do multiple audits. Statutory audit, tax audit, GST audit, if the same person does, he might lose that professional skepticism, independence, agreed. In that way, it may not be right for the statutory auditor to do the tax audit also. And we all know, very big CA firms, MNC firms, they don't take both.
Without completing a tax audit, you cannot certify statutory audit. I mean, that's what happening because provision.
Small size company, I know.
Doing it, yeah.
Small size company, I know, but theoretically, no. Within this room, we both say it is not so. Statutory has to happen based on balance sheet. He has to do the tax audit. We are used to doing an audit with everything. Statutory audit, tax audit, LS. No, theoretically, no.
Even in tax audit also, in TCS, TCB, it's not the wording is it's not proven fair, it's proven correct.
Correct, yes. In fact, now in GST, it's even more. GST, you Bhagavad Gita, Satyam Mandringa, he has completed every registration, every section of GST.
This guidance note will applicable for that or not?
No, because there is a separate guidance note for that. The scope says where there are separate guidance note, please follow that. And that guidance note saves you sufficiently. He says, you need to give.
The wording is tax audit report where we are giving
True and correct. Yes. Sir. That guidance note, if we read that guidance note, there also he uses similar language and safeguards the chartered accountant's interest. He says, though you are giving a true and correct thing, but this is what it is, you need to verify these things, you need to get this representation, you need to get this engagement letter. Adallam angeyu irukku. So this guidance note does not cover because he specifically excludes.
Again, the guidance notes are recommendatory and mandatory.
This one, sir, this is already mandatory for 48 months. Yes, sir.
But tax audit is not a mandatory guidance. Some of the guidance
Yes. No, for that matter, it is only ultimately a guidance note only.
Yes.
It is always a recommendatory. Sir, so what is the definition of recommendatory and mandatory? In my view is, when you want yourself to get saved, take it as mandatory. When you don't want yourself to get saved, you say it is recommendatory. In the perception of insurance, if you are ready to take the risk of going beyond what institute can save you with, say it is recommendatory only. I am not going to follow that. When you want institute to save you someday, please say it is mandatory and comply with it.
The guidance note, the applicability of guidance note is that if you deviate from the guidance note, you are doing it your own peril.
Correct, exactly, sir. That's what I said. If you are ready to face the song of not complying with it, please do that. Everyone will be ultimately saying that, sir, I know. In the 15 CV, I am going to
As a matter of fact, you can deviate from the expert advisory committee opinion.
Also, yes.
Very, very happily,
Yes.
without any problem, because it's only an opinion given by the staff of institute or whatever.
Yes, and the first line itself will read, this is only for this specific scenario. It need not be taken as a law for the purpose of a similar transaction.
It's not approved by the council.
Yes. They spell it out very clearly. Just that if we follow that, we have safety.
If you do do not follow also, no problem.
You should be ready. That's all. You should be sufficiently ready to say, I didn't follow because my fact is different from his fact. This is the basis on which I did this accounting treatment. We should be so strong.
Sir, what are the certificates that are very risky in your perspective?
After this guidance, everything is risky. So, risky
Which has
in what
consequence, based on the consequence.
So anything that goes to authority, sir. At least in this current status, I am saying I am receiving notices straight from the income tax department on the 15 CBs I am issuing, on 3 CEBs that I have issued, on 3 CDs that I have issued. We are getting letters from RBI, we are getting letters from ROC. Everyone gives us letters. We give reply, we come out. That is a separate part. What I am saying is, your question. Everyone questions anything under a legislation, your question. The sad part is, they write to the institute also. That is where institute immediate has to react to that. They will write to us saying we are getting an information like this, what is it? It gets dropped as a separate part, but you know that 48 hours or 72 hours of inconvenience is going to be there.
But on 15 CB certification, this limited assurance.
Sir, we have to give, it's what this guidance note says.
But where? How?
Give a separate report. So he says in para 32, you first give a separate report, like what this guidance note says. Let income tax department reject it. Then you give 15 CB.
Oh, that is online. It is
Yes, sir. Even for online, what they say is, even if it is online, ultimately there is a building somewhere in India, no, for me to write a letter. He says to that person you write a letter. For 15 CB, it is a TAN-based issue. So it is a tedious circle of that assessee which is responsible, which is the which is the authority ruling that 15 CB. Write a letter to him saying, for this 15 CB, this is the report. Then he will reject it. Then you issue your normal 15 CB.
Every time we have to send
So excellent question, sir. Sorry, I should have addressed it by myself. So what he says is, the first time when you are issuing a certificate of a kind, you do this exercise. When it gets repeated every time, you can place reliance on the first time. Like for 15 CB this month, first certificate, I do this. Then the similar nature of certificates gets repeated throughout the month. I can always place my arms on the first time of rejection that happened and I say, reject so I am giving the law required, law specified format. Day 1 he rejected, no, so I am giving. Day 1 I am rejected, no, I can continue to sing that song forever. So it is not that for every certificate I need to go. One format of certificate, once I need to do. Sorry, I should have addressed it myself. Yes, sir. Anything? Thank you, sir. Thanks a lot.